the centuries, money has taken many shapes and forms. Seashells, salt, and tobacco, before paper bills were invented. But could the 21st century be the end of money as we know it? Cash is scarce these days. Most transactions happen with a tap on the phone. The invention of blockchain, internet payments, cryptocurrency are all disrupting traditional banking. El Salvador is the first country in the world to adopt Bitcoin as the official currency. Developing nations with poor access to global financial markets consider the revolution an equalizer. But advanced economies are sounding the alarm. They say crypto is too volatile to be trusted.
Cryptos are not currencies. Full stop.
Retail trading is easy now, but also risky. Against this backdrop, how can investors navigate risks? Where do the opportunities lie? We convene the biggest innovators catalyzing change in the global financial market. This is the Bloomberg Financial Innovation Summit.
Good morning. I'm Katie Greifeld, anchor for Bloomberg Quick Take. Welcome to day one of the Bloomberg Financial Innovation Summit, where we're taking a closer look at the technologies and innovations driving our financial future. Before we get started, I have a couple of announcements. First, I would like to acknowledge our U.S. presenting sponsor, Invesco QQQ, and our presenting sponsors, CoinShares, Copper, InterSystems, and the Qatar Financial Center. If you experience any issues with audio or video quality, try to refresh your browser or use the chat box in the bottom right corner of your screen for support. You'll also be able to submit questions during the interviews, and we certainly hope that you do. We're probably not going to be able to get to all of you, but we're going to try our best. To submit a question, please click open the white tab on the right-hand side of your video window and submit your question. If you note your name and geographical location, we'll give you a shout out. For today's event, we have partnered with Thistin. It's an audio-to-text platform that is transcribing today's discussions in real time, making the event more accessible. You can access Thistin for the real-time transcription via the link in the session description. Please engage with us on social media using the hashtag FinInnovationSummit and engage with other attendees in the audience in the event chat in the bottom right corner of your screen. And now let's get started with our first session. Please join me in welcoming Caitlin Long, founder and CEO, Avanti Bank and Trust, Nick Carter, general partner, Castle Island Ventures, and co-founder, Coinmetrics, and Michael Saylor, chairman and CEO of MicroStrategy, Inc. It's great to have you guys with me. We have three heavy hitters, 30 minutes, and a lot to get to. So I'm going to start with a rapid fire question for each of you. I want to hear, in your view, what has been the most significant development in the cryptocurrency landscape, good or bad, in the past year. And Caitlin, I'm going to put you on the spot first.
Oh boy, okay. I would say it was the battle testing that Bitcoin endured with China kicking the miners out, and how the hash rate in the network fell and came right back up, and we restructured. And the Bitcoin blockchain just keeps on adding more blocks, and it's even more battle tested and hardened every time some external attack like that comes at it. It just keeps on trucking.
Battle tested. I like that word. And Nick, I know you've been following the mining discussions very closely. I want to ask you the same question. What's the most significant development we've seen in the past 12 months?
Yeah, the hash rate transition was immense and incredibly revealing. But for me, it was El Salvador legalizing Bitcoin and acquiring it on its balance sheet. I mean, that's the first non-pariah nation to officially acquire Bitcoin. There are others that we sort of probably believe, or it's implied, own Bitcoin, but El Salvador was the first, truly integrated nation in our international system to actually acquire it directly and vociferously. So that was it for me.
And Michael, I'm going to get to you in just a moment, but Nick, I actually do want to follow up, because a lot of people would push back and say that rollout came with a lot of glitches, a lot of problem, and that it's a flash in the pan, one time happening. I mean, what would you respond to that?
Well, I would distinguish the very real, law that was passed, putting Bitcoin on an even par with the dollar from the, software itself that was produced by the government. And no government-produced software is ever going to be perfect. But the important thing is that they've established Bitcoin as a monetary good that's on a completely even par with the existing monetary asset there.
All right, fair point. And Michael, coming to you, same question, most significant happening in crypto in the last year?
I think the emergence of a political consensus in the Western world that Bitcoin is Western technology, not Eastern technology, following the China crackdown, and that Bitcoin is property and not currency. And the acknowledgement by the head of the EU Central Bank, the head of the Federal Reserve, the head of the SEC, Congress, senators, that Bitcoin is digital property. You can hold it. It is the standard by which all other properties will be judged. And I read that as a green light for institutions and mainstream investors to own Bitcoin in the Western world. I think that's the most significant thing that happened this year.
All right, that was a great rapid fire. And I want to zero in on regulation, because that's been the most interesting thing, at least from my perspective, that around the world, but particularly in the US, when you look to the Federal Reserve, the Treasury, Congress, all sort of sharpening their focus from a regulatory lens on crypto. And just this week, we had the President's Working Group on Financial Markets release a report on stable coins. Those are designed to be linked one for one to the dollar or some other fiat, basically saying that stablecoin issuers essentially need to register at banks. And Caitlin, 30 minutes before this panel, you had a very tantalizing tweet. You said that you'll give your first public analysis and its massive impact on crypto. So I want to start with you. What's the takeaway? What's the impact?
Well, the takeaway is that every stablecoin issuer has to get FDIC insurance now. And the impact of that is that the Bank Holding Company Act is going to apply to every stablecoin issuer. What does that mean? I saw a very interesting article yesterday that the press was starting to figure it out. The press did not figure out the real impact of all this yet, but it started to yesterday, that if Facebook is going to issue Diem, then Facebook itself, the holding company, would have to become regulated by the Federal Reserve. Of course, that's not going to happen, but that's what the Bank Holding Company Act means. It means Federal Reserve regulation of all the affiliates. And so when I say there's going to be massive impact on the crypto industry, it's really on the market structure. It's not on Bitcoin itself. Bitcoin, Ethereum, all the actual on-chain coins are going to be fine. But where you're going to see an impact is in a lot of the trading. Stable coins are about 70% of the trading. A stable coin is on the other side of a crypto in about 70% of transactions. And so what the President's Working Group paper has done is say, and by the way, they don't need congressional approval to enforce this, that stablecoin issuers have to get FDIC insurance. What's the impact of that? Well, there's not a single crypto native company that has even applied for FDIC insurance yet. There's a reason for that, but that's the fact. Actually, there's one that has applied, but the application was withdrawn. So now all of us are starting from scratch to get FDIC insurance. It's a fascinating fact pattern because the incumbent banks already have FDIC insurance. And I certainly hope that the intent wasn't to create a structural advantage for the incumbent banks, because all of the startups are now scrambling to get FDIC insurance. And I can break a little news this morning. Last night, Avanti's board voted for Avanti to file for FDIC insurance, and we will be dropping that FDIC insurance application very soon. But most of the crypto intermediaries are not structured to become FDIC insured banks. They don't have the capital. They don't have the compliance. They don't have the management teams. And very importantly, they're not ready to comply with the Bank Holding Company Act, which puts some pretty serious restrictions on affiliates as well as on the cap tables. The banks, for example, are not really allowed to have preferred stock in their cap tables. And boy, there's a lot of venture capital money and a lot of crypto intermediaries that wouldn't comply with the Bank Holding Company Act.
Well, I'm so thrilled because I love breaking news. But Caitlin, I'm curious that the fact that Avanti has applied for FDIC insurance, is that in direct response to this president's working group paper?
Yes, and to be clear, we haven't dropped the application yet. They have our business plan. We've been in touch with them as most of the crypto companies that are seeking some form of bank charters have been in touch with them. And we look forward to working with them. The rules keep changing, and we're going to figure out a way to get open. We have no problem complying with all of these rules. We are the closest among all of the crypto intermediaries because we already have that bank charter, and we're already in compliance with the Bank Holding Company Act. The most important question, though, is how fast this is all going to happen, and Avanti is going to be a test case for that. We're scrambling to get that application in as quickly as possible, and look forward to rolling up sleeves and determining whether the innovators really will have the ability to compete with the incumbents.
Well, when you do drop that application, I want you to tell me first. But Michael, I want to bring you in here because on our prep call, we were talking about this race between sort of these private tech companies and sort of these crypto native companies and the government really to control this space. And Caitlin mentioned that a lot of the crypto native companies haven't applied for FDIC insurance, and that could create an uneven playing field. I'm curious to hear your thoughts on that and who's actually going to come out on top here.
I think the report is a seminal event. It signals the transformation of the industry from the offshore, unregistered, entrepreneurial organizations that have dominated it for the first decade to the institutionalized, publicly traded companies that are in the traditional industry. I see it as a green light to the JP Morgans and the Bank of Americas and the Citigroups of the world to issue $1 trillion of stable coins. There's $130 billion of stable coins in the world right now, right? They're either going to zero if the regulator said you can't have them, or they're going to $1 trillion followed by 10 trillion. And I think the administration knows this, and their vision is FDIC-insured banks, properly managed with legal teams and general counsels and compliance routines, issuing billions and then hundreds of billions and then trillions of dollars. Not for the stablecoin use case right now is the settlement of offshore exchanges on Saturday afternoon trading crypto. But the real use case is treasury remittance of Amazon and Apple and Google and Exxon cross-border, or 8 billion people buying things. And so if 8 billion people are going to have digital dollars in their wallets, and if we're going to move trillions and tens of trillions of dollars of money around at the speed of light, you're not going to do it without coming into the regulatory environment, which includes FDIC, insurance, compliance, and the like. So I think if you're a small crypto startup, this is a bit scary. If you're Jamie Dimon, you were waiting for this before you considered getting into this business. And now the question is, which of the big banks are going to move first, and which of the crypto native players are going to cross the chasm to become institutional public grade?
And how many of their developers will stay working for them if they get acquired by big banks?
Like, we got to grow up at some point. There's a lot of Bitcoin maxis that don't like the idea that publicly traded companies own Bitcoin. But that doesn't stop me from buying $3 billion of it. And there's a little friction between the past and the future, and who's going to impact this decentralized crypto economy.
Nick, I want to hear your thoughts both on the paper and to Michael's point that, I mean, this could open the door to the big banks, the JP Morgans, the Goldmans, issuing $1 trillion worth of stablecoins. I also want to hear your answer to that. You know, do you think that the crypto community would actually use those stablecoins, those bank-issued stablecoins, or who would that be for?
Well, the innovation historically in the stablecoin space has not come from the banks or the incumbent financial sector. It's come from startups and new crypto native firms. So I'm going to push back a little bit here. I mean, I found the paper to be perturbing, and I found that it didn't, grant any recognition to the structures under which stablecoins are issued today, like the trust charter in New York or in Nevada, or under the money transmitter regime on the state-by-state basis. And, these structures work pretty well, frankly. There's heterogeneity there, right? But under some of those models, you have stablecoin issuers as fiduciaries holding, high-quality liquid assets. So the bank charter model, which sort of implies that the institution is engaging in maturity transformation, doesn't seem to fully fit with what stablecoins are doing. It doesn't really reflect the fact that they're not really engaging in, long-term lending. And so, I would push back a little bit and say, I don't believe stablecoin issuers need to be regulated as banks. That to me just seems to invite a huge amount of government oversight. And, requiring FDIC insurance for stablecoin issuers, in my view, doesn't really comport with the fact that what they're doing is just holding high quality assets on a one-to-one basis, on kind of a full reserve basis. And if you look at the FDIC, I mean, that's an instrument of government intervention into the financial system. Look at Operation Choke Point. FDIC was the means through which, political dictates were handed down. And so, I find this to be ill-fitting and frankly, anti-competitive, because it's going to make it immensely difficult for new startups to break in and become stablecoin issuers, and it's going to reward the largest financial institutions.
Well, Nick, I'm curious to hear, do you think that there should be more stablecoin issuers, or would this structure, this system, which you say works very well right now, be better served by just having one or two main ones? Because right now it feels like the big boys are Tether and Circle, and that seems to be what everyone uses.
I mean, it's very dynamic. If you look at the market share, Tether had almost 100% market share, and today they have, a much reduced market share. USDC has been very successful, but there's other stablecoins issued under some of these other regimes, which in my view are regulated. I mean, people describe stablecoins as unregulated. That's not the case. There's other stablecoins that have done very well and that are, pretty closely monitored by their relevant regulators, whether it's DFS, whether it's, individual states. And so it is dynamic. And of course, from, a free market perspective, I think more issuers is always better than fewer. But the president's working groups, language here, I think would restrict the set of issuers.
All right, well, we could talk easily for an hour about stablecoins, but somehow we're already halfway through our session almost. And I do want to say again to the audience, if you have questions, feel free to submit them. But we have to talk about ETFs, because last month, history was made in the US. You saw the first Bitcoin futures-backed ETFs, not physically backed funds, launch on US exchanges. And that was to a lot of fanfare. I mean, the ProShares product accumulated over 1 billion assets in about 2 days, which is pretty remarkable. But Caitlin, I want to hear your thoughts on whether the fact that we do have US Bitcoin ETFs now, they're futures backed, again, a caveat there, but is that good or bad for the ecosystem overall?
Oh boy, it's a double-edged sword. And ever since Backed entered into the scene back in 2017, 2016, I've been warning that, the leveraged players coming into crypto were going to start applying the same leverage games that the traditional financial industry deploys. And when they do those leverage games, they are creating more paper claims to Bitcoin than real on-chain Bitcoin exist. And for owners of the real on-chain Bitcoin, like MicroStrategy, they don't care. The fact that the price gets kicked around, we've had 2 flash crashes just since the ETFs were introduced in Bitcoin. The price is going to get kicked around periodically and probably suppressed, because real demand is being satisfied by fake supply, paper supply. And that does, all things equal, anytime you increase the supply of something and you hold your demand constant, your price is going to drop. That's exactly what's happening. Bitcoin is now a lower price than it otherwise would be were it not for all these leverage games. But I will also say that those warnings that I had back in 2016 were about the leverage games that were going to be played. What I missed back then was that it wasn't the Wall Street firms, that it was going to be our own industry that was going to bring those leverage games. And so the ETFs just ratcheted up by a lot. But the leverage games, this is one of the biggest trends of this 4-year bull cycle, is there's so much leverage in it. And the impact of that is going to be fascinating. We don't really know how it's going to play out.
Michael, I'm curious to hear your response here, given that MicroStrategy is a significant holder of on-chain Bitcoin. I mean, what's your opinion on these futures-backed products?
First of all, I'm not concerned that a spot ETF is going to rehypothecate or lend their Bitcoin out. I think that that's going to be governed. So that's not a concern of mine. I think that the destiny of Bitcoin is, first, it's eating gold as fast as it can, and so it's going to grow to replace all gold ETFs in the next 2-3 years, and ultimately it's going to emerge as the primary asset index for the Western world, which means it's going to replace the role of the SPDR, SPY, the S&P index, and to do that you need the spot ETFs, and once these spot ETFs roll, I think you'll see billions, then tens of billions, then hundreds of billions, then trillions of dollars flow into them. And, the ETF will just hold the underlying Bitcoin as a custodian and serve as an important institutional on-ramp for institutional investors that want that monetary index exposure.
And Michael, you said spot Bitcoin ETF a few times there. I mean, is the futures-backed products that we are getting now, are they not the key to that?
Yeah, I think they're inferior offerings to a spot index, but they're the best that institutional investors can get right now. But clearly, the right answer is let investors buy $1 trillion worth of Bitcoin via an ETF, because the ETFs plug into the existing security structure, the existing prime brokerages, the existing collateral packages, et cetera. So I think if you're looking for an institutional catalyst, clearly the availability of a broad range of ETFs, especially spot ETFs that are trusted, like if I bought $1 billion of this stuff and then the person running the ETF could rehypothecate it 14 times, that's not trusted. I don't think that's going to happen. I don't think that's going to be allowed. So if I have a trusted, perfected spot ETF, I think it's going to grow rapidly and it's going to serve a purpose as the basic monetary index of the Western world.
And Nick, what's your opinion on that? I mean, in thinking about institutions in particular, how big of a catalyst is the fact that we finally have Bitcoin ETFs in the U.S.?
Well, unfortunately, the futures ETF is inferior. And if we got a spot ETF, I think it would be the hottest commodity ETF launch of all time, attracting probably well over $100 billion in assets within a month or so. But the current ETF we have right now is a shadow of that. And I believe it's a political restriction, which is limiting the market's ability to create this product that everybody wants. And there's functional spot ETFs in other countries. They work just great. And there's no explanation for the reticence at the top levels here to approve this product, which obviously should exist and would make life immensely easier for all types of different investors.
Well, if I asked you to explain that reticence among U.S. regulators, which I'm going to do right now, what's your best guess for why they approved a futures-backed ETF over a spot ETF? And I mean, what is the drawback? Because I feel like we've danced around why, the community really believes that a spot ETF would be better.
Well, because there's just, as you know, and you've reported on this very well, there's a significant cost, 10 plus percentage points associated with rolling a futures-based product, which introduces a lot of tracking error. The stated justification is that, the CME is regulated by the CFTC, I suppose, but there's plenty of other commodities that have markets which are spot markets and globally traded, and the SEC doesn't really have a problem with approving ETFs for those. They don't have a problem with approving Forex inverse natural gas ETFs either. So a lot of these complaints about investor protection ring completely hollow to me. And I think ultimately the motive is just simply suppressing the growth of Bitcoin.
Mm-hmm. Yeah, definitely have reported a lot about contango in the last couple of weeks. And Michael, I want to turn back to you because, a lot of people have made the point that it's easier to just buy physical Bitcoin. And that's something that MicroStrategy has been doing for several years now. But I was looking at your holdings and it did jump out to me that since the mid half of this year, MicroStrategy's purchases of Bitcoin have cooled down in terms of the pace. And I'm curious why that is.
Well, we've acquired, at least $500 million worth of Bitcoin a quarter ago and about $420 million this quarter. The price of Bitcoin's going up. I mean, we bought a lot of it at $10,000 a coin. It was a bit easier then. So buying it at $50,000 a coin slows you down. We're going to continue to acquire it. Look, I think with regard to these ETFs and the regulation, there's a rate at which the regulators can evolve, and they're going at a responsible, prudent fashion in their view. And if you're an investor, when they finally solve all these issues, it's going to be I think it's 1,000 times easier to buy the spot ETF than it is to buy Bitcoin as property. An institution would take 6 months to a year to go through all the regulatory compliance due diligence checks to actually figure out how to acquire and hold and custody the property, and it doesn't fit into their architecture. So when that problem gets solved, the demand's going to go through the roof. The motive to sell it is going to disappear. The price is going to shoot up, right? So you either do the work now and get a lower price, or you wait until it's super easy and you pay a higher price, and everybody gets to make that choice. I kind of like the fact that it's hard to buy the property right now, and the accounting is obtuse, and the spot ETF is not there. As I said, tongue in cheek, with regard to the FDIC chair was considering letting banks put it on their balance sheet. When they finally work that out, everybody will want it, nobody will sell it, you won't be able to afford it.
That's interesting. Yeah, there's sort of an exclusivity there. But I want to stick with regulation and go to you, Caitlin, because you're based in Wyoming, and it's interesting that Wyoming has become this sort of crypto hotspot, especially as, the broader federal government sort of tries to work out how it actually feels about crypto. Wyoming, obviously very crypto friendly. Curious to hear, first of all, why that is, why Wyoming, and what other states do you think might be taking a page from Wyoming's book?
Well, it was opportunistic. And in fact, actually, we're seeing a repeat with all of these new banking rules that are coming down. We're seeing a repeat of what happened 4 years ago, where suddenly a lot of crypto startups lost their bank accounts. I think it's pretty clear. In fact, actually, the OCC chair yesterday made an incredible speech that everyone with any interest in fintech needs to read, where he essentially said, not only are we bringing crypto into the perimeter, but we are also bringing bank as a service and rent-a-charter arrangements into the perimeter. Translation, get ready, because a lot of the fintechs are going to be losing their US dollar banking access. He all but said that yesterday. And Wyoming got started back in 2017, in part because there was so much debanking of the startups of crypto back then. And ultimately, Wyoming was trying to solve a problem for the industry. And it started because Wyoming actually had an outlier money transmission statute that needed to get fixed, and thank goodness it did. And then the legislators saw an opportunity to welcome an industry by just simply giving it a legal status. It's pretty simple what Wyoming did. We just said, hey, Bitcoin is property, and we defined it under commercial law and created a roadmap for judges and parties to transactions to know exactly what their rights and obligations are under the law, making it backwards compatible with the legal system. And in fact, actually, a very important event is about to take place later this week, which is the Uniform Law Commission in the United States, which recommends laws to the states. The states are actually the primary governmental unit in the United States. A lot of folks lose sight of that. It's not the federal government, but especially with commercial law, the states control that. And there is an effort to actually take the concept of what Wyoming did and make it broad. You asked the question, who's followed Wyoming? A handful of states have early adopted that Uniform Law Commission proposal, Texas, Arkansas, and Nebraska so far. And what I would recommend to other states is early adopt that proposal. If you don't, the plaintiffs' lawyers are coming and your court system is going to get all tied up, gummed up with litigation over this, because there's so much money in this industry now. And the right thing to do is just define what the legal status is. And that's what brought Wyoming to the table. And then the industry flocked here because simply there was a definition of legal status.
Man, the American West leading the way. I love it. But somehow we only have about 3 minutes left. We do have a question from the audience that I want to shoot to all of you. And that question is, what major catalyst, in your opinion, will take the crypto asset industry to its next level of maturity and adoption? So we're going to do another rapid fire. Nick, I'm going to shoot that question to you first. What's the next major catalyst?
If I had to guess, a major central bank acquiring Bitcoin on a par with its gold reserves, looking at the share of gold it owns and acquiring that proportional amount of Bitcoin in order to hedge the monetary transition that's coming here.
Any guesses on what central bank that could be?
I would look towards the ones that are divesting themselves from dollar assets and buying gold and indicating an openness to alternative monetary regimes, which is many of them. I would look towards the ones with sovereign wealth funds, with mineral funds. Look to the ones that can easily turn energy into money through Bitcoin mining.
All right, fair enough. Michael, same question. Next major catalyst.
I mean, the major catalyst would be a spot ETF of Bitcoin, fair value accounting for Bitcoin, and FDIC guidance to allow a bank to hold Bitcoin without a 100% reserve ratio.
When do you think we could see a spot ETF approved in the U.S.?
I can't speculate. I just think those are the catalysts.
I wish you could. Yeah. Okay, fair point. Caitlin, same question. Next major catalyst that's going to take the crypto industry to the next level.
I would say it doesn't need one, but to respond to what Michael just said, it's so interesting, though, that regarding the FDIC and allowing banks to hold Bitcoin on balance sheet, oh boy, that's putting some serious risk if that does indeed happen right at the core of the financial system. It's fascinating to me that it used to be that you tried to keep risk out of the FDIC. And now the discussion is to bring all this risk into the FDIC and have levered banks holding Bitcoin. It goes back to the early proposal or early observations about Bitcoin potentially being an apex predator in the financial system. So I would hope everyone's cautious about that. But back to your question, I don't think Bitcoin needs a catalyst. And to me, price is the least interesting aspect of it. All we care about is that it keeps on trucking. And I'm very interested in the Taproot upgrade that's coming for Bitcoin very soon. Just hardening that technology. All we care about is that it just keeps adding blocks, and all of these market structure and bank and ETF discussions all have to do with price. But at the end of the day, as long as the core Bitcoin blockchain is still adding blocks, then Bitcoin is just fine.
All right, we're going to leave it there. Great discussion, guys. Thank you so much, Michael, Nick, and Caitlin. Great to talk with you today. Really appreciate your time. That was just the first panel of the Bloomberg Innovation Summit. We have a great day coming up, so please stay tuned. And thank you to everyone who took the time to watch today.
everybody, I'm Alex Steele. I'm joined with a very special guest, Hester Peirce, Commissioner of the SEC, nicknamed Crypto Mom as one of her favorite titles. And we just sort of heard a panel talking a lot about being very bullish on crypto and Bitcoin. So Hester, you're like the perfect person now to talk to about this. One of the cases that was just made for a spot Bitcoin ETF is that, quote, it would be basic monetary index of the Western world and could attract billions of inflows. Why can't the SEC approve a spot Bitcoin ETF?
Well, it's great to be with you, Alex. And I have to start by telling you that my views are my own views, not necessarily those of the SEC or my fellow commissioners. And I think that's really relevant on this particular point. In the past, going back 2 years now, 2.5 years, I have urged us to rethink our approach to spot Bitcoin exchange-traded products. I think that the standard that we apply has been different than the standard we've applied to similar products. So I don't know whether that will change, but my guess is that given Chair Gensler has signaled pretty strongly that he likes to see these products trade in regulated markets, that may be something that's standing in the way of approval.
What's the holdup, though? I mean, sure, the regulated market part, but like, what are the discussions behind closed doors about it?
Well, I mean, I can't talk about discussions behind closed doors, but I think that the commission has published its reasons for rejecting a spot Bitcoin exchange traded product, and the reason is that the Bitcoin markets don't look like our regulated securities markets.
To that point, Nick Carter in the previous panel said that the excuse that is also often given is because of consumer protection. He called that sounds completely hollow. What are your thoughts?
Well, you know, I think the thing that regulators are most comfortable with is markets that look like our own. And we think those are the only markets in which investors or consumers are protected. But there are other ways that investors can be protected. They can be protected through the self-regulatory forces, through arbitrage mechanisms, and so forth. So, you know, I don't say that that's a very good excuse. And in fact, I think by withholding from investors exposure to spot products, we're actually not helping them. We're actually putting them in a worse position. So again, I'd like to see us change that. It depends on the facts and circumstances of each product, of course. We do these product approvals on a case-by-case basis. But I do think that it's not the best for investors not to give them access to this product.
So Direction was asked to pull their spot Bitcoin ETF. The next one is due to be approved or not on the 14th. It's BANEC. Is there anything that these guys can do and present to the SEC and Gary Gensler to be like, look, this is what we're doing. This is why you should approve us?
Well, I mean, Chair Gensler is a data person, right? He likes data, and he comes from MIT, so he comes from an academic environment where he's thought a lot about data. And so I think that can be compelling to him. But he also is a big believer that and he's been very clear that he thinks that having a federal financial regulator of the crypto markets is something he'd like to see.
What do you think the chances of that happening are?
Well, there's a lot of attention now. I mean, crypto has been growing so quickly, so there's a lot of attention in Congress and regulatory agencies. But Congress has a lot on its plate, and so I don't know whether Congress is going to be able to take the time to build a regulatory framework. We could do some of it on our own, but again, there's some jurisdictional questions, and I think we've seen in the last couple weeks that the CFTC may have a different view of jurisdiction than we do. So where this will end up, I don't know.
I don't envy your job. I got to tell you, dealing with all of that. Do you think that there should be, if we could get it done, should there be a regulator just focused on Bitcoin? Do you think that would help a lot of things?
Well, personally, I don't think that's necessary. You know, whether we decide to build a federal regulatory framework for crypto is sort of a discussion I think society needs to have. We have such a fragmented regulatory system for financial products and services generally that I don't know that adding another regulator would be my top preference. The SEC has experience regulating retail markets. The CFTC has experience regulating futures markets, and then the banking regulators obviously have have experience. So perhaps there's some mix of the existing regulators that could handle crypto regulation if that's what we decide. And then I also point out that I think decentralized finance, smart contract-based transactions have a built-in regulator, and so whatever regulatory structure we build should recognize the unique aspects of this technology that allow for better regulation by market participants.
Why do you think this is so hard? And why do you think that there's so much disagreement on it?
Well, I mean, this is clearly the beginning of a pretty large industry and a large sector in our society. And so I think a lot of regulators want to plant their flag and get a little bit of make sure that they get a little bit of a piece of that regulatory pie. So I suspect that's a lot of what's going on. And then I think the other piece that makes it more complicated is that a lot of people working in this space don't have a lot of experience with financial regulators. And it's a very hard world to operate in because there's so many rules and there's so many ways that you can trip up those rules.
So if you were to create, like if we call you Crypto Mom, and you were going to create your perfect child regulator, what would that look like? No strings, just perfection.
Yeah, I mean, from my perspective, we should start with the presumption that when two people want to engage in a transaction and it's voluntary on both their parts, that should be permitted. And then we have to think about, okay, are there financial stability concerns? Are there concerns about asymmetric information that we need to address? And then we build it from there. And the other thing the regulator would be principles-based and would be technology neutral, but would also recognize that sometimes new technologies come along that require us to do a rethink of the regulatory approach. So that's a bit of a vague answer, but I think it is important to have this principles-based approach, one that involves talking to people who actually know the technology and who are using the technology. So it would be a cooperative approach to building up that regulatory regime.
What stage of life right now do you think that crypto is in? I mean, Gary Gensler said, crypto can't reach adulthood unless there is regulation. Like, how old's your child?
Well, I think my child is still an infant, but I also can assure you that I'm much more of a free-range mother than Chair Gensler. I certainly think we better raise up children that are able to function without having a regulator tell them what to do every minute of the day. So I hope we can come to a place where again, there's a range of views. That's the whole point of a commission. But I hope whatever regulatory framework we build does allow some freedom of movement.
We could go with this analogy like all day, but let's go to different aspects maybe of the crypto market. Stablecoins, should they be regulated like banks?
I think there's some sense to taking a bank-like approach. It is, I think, more of a bank-like product. But again, stablecoins vary. And so it will depend on the facts and circumstances. There are potentially stablecoins that fit within the securities framework, and those would have to be regulated from that perspective. I would caution about, and again, I'm not speaking for the SEC. I certainly am not speaking for the banking regulators. I would caution about anything that introduces a new extension of deposit insurance. On a different note, utility tokens and security tokens, should there be a distinction between them? And if so, what should it be? Well, there is potentially a need to have that kind of a distinction. And I think, I don't know that I would break it down that way, but I would say something may start out being sold in an offering that looks like a securities offering, but may some years down the line just be a token on a network that people use on a network. And so I think we need to have some kind of regime in place that allows you to get from the point where it's governed by the securities laws to the point where it's freely tradable and it's not subject to the securities laws.
And that's something I think everyone is sort of struggling to figure out now. I've suggested one solution, a safe harbor. I think there are other possible solutions as well, but I think that is something we have to think about.
What would a safe harbor look like? What would that be?
So the safe harbor would say we get that there are information asymmetries at the beginning where there are people who are developing this network that the token's going to operate on. They know a lot about what their plans are. They know what their background is, what their expertise is. They know what the token economics is. So let them lay that all out. Let them update it as they go along. Then the people who buy the tokens at the beginning and throughout have access to that information. Then once that network is built out, the information asymmetries are gone. Everyone has the same amount of information by definition. And then at that point, what you do is you take it out of the SEC framework altogether.
So it does seem like obviously the conversations around Bitcoin at the SEC are pretty fractured. And I wondered, in terms of retail traders, the GameStop situation, the Robinhood situation, are those conversations equally as contentious, or is there more common ground?
Well, I mean, the point of a commission is that you have a wide range of views. So I think everyone shares an interest in having retail investors have access to the markets and be able to participate in the markets. From my perspective, it's really exciting to see a new young generation of investors interested in participating in the capital markets. And I think we can build appropriate investor protections around that, but make sure that we're not stifling their ability to participate.
What would that look like? What are your ideas?
Well, I mean, I would like to revisit the accredited investor definition so that more people could participate more broadly across the capital markets. But I would certainly, I mean, the other piece I think is that commission-free trading and the existing structure, market structure, has worked quite well for retail investors in terms of getting them access to the markets. And so whatever we do, let's not set ourselves back and put ourselves back to a time when it was more expensive to trade and retail investors faced real barriers to entry.
It does feel like, though, there are definitely some issues. One of them is how long it takes to settle a trade. I was talking to an analyst who was like, in the age of Twitter and Bitcoin, it still takes 2 days to settle a share of Apple, and that's kind of bananas. How do we fix that problem?
That's something that I think we're certainly looking at. The settlement cycle was shortened not that long ago, and I think there's certainly more room to settle it to shorten it further. And I guess we have something to learn from crypto here too, where settlement does happen a lot more quickly. So completely agree that that's something we should be working on.
Another thing that clearly stands out is all the options trading. You can say that the retail guys are trading stocks, but really it's very much options. Where are you guys talking in terms of the conversation around the options market?
Well, investor protection includes us working with other regulators to make sure that investors know what they're doing and are educated about what kind of trading they're engaged in and what the potential ramifications of that trading are. One thing I think we really need to do is work on better communicating with investors in ways that they'll actually engage with. So, trying to take a book take a page out of the book of the industry and meet people where they are in terms of investor education. I think that's really key.
What does that look like? Like, would they have to take a class, or do they sign up for something? Like, how would that in practice work?
Well, I mean, I think it's not. Look, I mean, I take a much more free market view than other people do, and my view is that adults can buy lots of things with their hard-earned money and participate in the options markets. So it's less of a mandate from my perspective than just making sure that the information is out there and available, not in in a dull paper format that people are never going to look to, but in the same types of mobile-friendly applications and technologies that they're used to accessing to do the trading or to buy other things or to engage in all other aspects of their lives.
So does that mean that one of the takeaways from the meme stock craze is really just the gamification of trading? It's like the actual underlying trading you feel comfortable with, but the making it look like a video game, is that where the problem lies? Because there was clearly really serious consequences for some individuals who lost a lot of money, some killed themselves. I mean, it's definitely an issue on that front. And it does appear maybe education could solve that. Is the gamification the problem?
Well, some people argue that it is, but my response to that is, and of course, we want to stop people from taking risks that they cannot afford to take, right? And so that's one piece of investor education, is to say you always have to be aware that there's a potential you could lose all your money or even more than what you invested. So you have to be very careful. But I think the other piece of it is remembering that making investing boring, as we've traditionally tried to do, is not really a great way to get access to capital markets to make sure that a broader segment of our society is participating in our capital markets. I think making investing, putting it on the same terms that other things in people's lives are available, is more likely to enable people to participate and to build their retirement nest eggs. So I don't think that the answer is to make investing boring.
So basically, it seems like your biggest takeaway from the memes stock situation is just education, is to find a way to educate in a non-boring but simplistic way.
Yeah, and I mean, the other point I would make is that a lot of these retail investors are, they're talking with one another. They are proactively looking to learn and educate themselves. So again, I'm not coming to this from a maternalistic perspective, right? I'm just saying that we can do a better job in making information available to people and in encouraging people to think through the consequences of what they're doing. But I think there's already a lot of engagement by retail investors with one another and with places where they can learn about investing, and I think that's great.
So to that point, and this is just maybe a little out of left field, but if retail investors can chat with each other on Reddit and Robinhood or whatever kind of chat boards that they want, why can't hedge funds do the same?
Well, I mean, there are different rules that apply, and I mean, market participants talk to one another all the time, and there are rules in place that govern, certain transactions and certain situations in the market. You can't manipulate the markets. Those rules are out there. They apply to retail and institutional investors alike. But again, I mean, hedge funds are probably more engaged in more transactions, and they have to be very careful about what they're doing. But rules apply, and we expect players in the markets to know what the rules are, especially sophisticated players.
Okay, so there is that distinction. Before I let you go, it has been a really intense and crazy year in terms of market action on so many different levels and so many different asset classes. Is there one area of the market that you think is just not functioning as it should or as it was designed? Not that it needs necessarily more regulation, but that there's just something wonky about it?
Well, I mean, I think we spend a lot of time talking about our equity markets, and maybe we need to spend a little more time thinking about our fixed income markets, which are modernizing, but maybe at a slower pace. So I think we should look to make sure there are no rules that are preventing modernization from happening at a quicker pace.
Does that mean like electronic trading, that kind of thing?
Right. I think the introduction of electronic trading has been much slower on the fixed income side than it is on the equity side.
Do you think that the SEC will be able to make any headway on that? Is there any appetite for that?
Well, I mean, I think it's something that Chair Gensler has talked about and is interested in, and I think others at the SEC are. So I suspect that, I mean, he's got a lot on his agenda, so it's hard to know what will happen first. But fixed income markets are one thing that's on that agenda, I think.
All right. Well, look, I really appreciate your time. It was a real pleasure to talk to you. Oh, we have a question. I think we have time for a question. Let me just get it. So this is from Kevin. Hester, any thoughts on standardizing margin notification lead times and historical margin data so that people can actually model risks so it's investment, especially relevant to futures?
Well, I'm not a regulator for futures, so I will start there, but happy to talk about that kind of issue. I think those kinds of things are sort of the building blocks of the regulatory structure that sometimes we ignore because we're talking about ESG and other higher profile things. So happy to talk offline if Kevin wants to reach out. Would love to chat with him. And if it's the CFTC he should be talking to, would be happy to put him in touch with someone there.
All right, Hester, thanks a lot. I appreciate it. Hester Peirce, Commissioner of the SEC. It's been a real pleasure. I learned a lot. Thank you so much for your time. Matt Miller, over to you.
I'm Matt Miller from Bloomberg Television and Radio, here to interview Yoni Assia, the co-founder of eToro. And it is one of the biggest, if not the biggest, retail trading platform in the world. Certainly the only retail trading platform that's truly got a global reach, Yoni. Talk to me about the size and scope of the company that you founded.
Sure. So eToro today is the world's largest social investment network. We have 23 million registered users from 100 different countries, where our users can trade commission-free stock trading of both US, European securities, some Asian securities, as well as cryptocurrencies within a social network where everybody can see, follow, and automatically copy the most successful investors. We are very much enjoying what we believe is an inflection point in the rise of retail investors all around the world, from Europe to Asia to the US, who are gaining interest in what's happening both in capital markets and the crypto markets.
So this inflection point has been really fascinating for me as a journalist to watch, and I'm sure for you, with such incredible growth in your business. Why do you think retail investors have, or Joe Plumber has decided to become an investor in stocks, in commodities, in crypto over the last couple of years? Is it purely pandemic driven?
I think we are witnessing a confluence of circumstances leading to the rise of retail investors. Just as an example, it took us 9 years from founding eToro to add the first 5 million registered users to the platform. Then last year was a significant growth of over 120% growth year over year, where we added another 5 million registered users. And then the first 6 months of 2021, we added another 5.6 million registered users to the platform. So we're definitely seeing an inflection point. And I think that is due to zero interest rates, right? So people are going to their bank and their money is either generating nothing or even negative interest rates in some markets. Everybody's talking about the fact that governments are printing unprecedented amounts of money. Platforms like eToro lowered significantly the barriers to entry through commission-free stock trading and through fractional shares. And I think sometimes people underestimate how important that is. Because before fractional shares and commission-free stock trading, if you had less than $500, it really doesn't make sense to start trading. If you're paying $10 per trade, you can't trade with less than several $1,000s. If you don't have fractional shares, if you can't buy a fraction of Amazon for $50 or $100, Amazon stock alone is $3,300. Add to that things weren't on mobile, their onboarding took time. So by creating a better user experience, it opened the world of trading and investing to a whole new generation, which is basically Gen Y, and now joining that Gen Z as well. who are looking for ways to basically make their money work for them. And if you're thinking about what the size of the discussion, we're probably seeing the biggest discussion, the widest discussion in human history on the value of money and on inflation. And you have today probably more people in the world than ever before talking about the fact that their fiat money, whether it's dollars or euros or pounds, are losing their purchasing power. And if they want to have their money grow over time, or at least to remain with the same purchasing power, they need to find alternatives to invest that money, either in the stock markets or crypto markets or others.
Let me just ask about that, because, you were founded right around the same time as Satoshi wrote the white paper on Bitcoin. And so eToro's lifespan is pretty similar to the lifespan of the crypto market. Is crypto responsible, at least partly, for this huge rise in retail trading? I mean, certainly makes up a huge part of your revenues.
I think that what we've seen over the last year has been several trends that sort of merged together to create a 1 + 1 = 10. And what we've seen last year with Corona in March, where the market stumbled, was really about equities market. So the markets dropped and retail investors actually flocked to the markets, and they started buying stocks in what now has been very cheap prices, because the markets didn't only correct, the markets corrected and reached an all-time high. At the same time, a lot of the crypto narrative is around basically hedging against inflation and hedging against governments printing money, right? So the real thesis around the store value of Bitcoin is the technologies that provides a global store of value for potentially hundreds of millions or billions of people in a decentralized way, but also its scarcity. Only 21 million Bitcoins will ever be created, and therefore that scarcity effect makes it deflationary versus fiat currency that's inflationary. And then at the beginning of 2021, we sort of saw both of these trends come together. So people in the stock markets realizing that the power of social trading, or the power of people over the internet collaborating together, actually impacts the market. So if you share your ideas, your investment ideas with others, you can actually help companies raise money, right? Which is amazing, which is the story of AMC or others. Over those last 18 months, what we've seen is the cycle where retail investors actually invest their money, they're consistently right? So crypto and Bitcoin are a part of that, and obviously have been very much first a retail trade. Institutions used to think it's very dangerous. They didn't know how to deal with it. They're still learning the ropes. But this entire $2.5 trillion industry is powered by retail investors from all around the world. It's truly a global market. And at the same time, we're seeing markets in all-time high and retail investors sort of learning through crypto, which is interesting. We're seeing a lot of people coming to eToro to trade crypto, and then we're helping them diversify their investments into the stock markets.
Yeah, the interesting thing about your business to me is you have a computer science degree, right? But you're dealing with two ends of the spectrum in terms of financial regulation and across borders. So on the one hand, you're allowing people to trade stocks, bonds, commodities, which is a highly regulated market, and I'm sure difficult to deal with in each, different to deal with in each different region. On the other hand, a very low regulation market, which is crypto. Obviously, that's coming. But how do you deal with that, especially as someone who's focused on writing the code to make it easy for someone to do on the computer? How do you deal with all this regulation?
So being regulated is a big part of eToro's business, and we've always been regulated and complied with local regulations. We're regulated in Europe, in the UK, in Australia, in the US, pending licenses also in Singapore, and starting now in Abu Dhabi, in the UAE. And we basically expanded our business from being a regulated securities broker, a regulated investment house, and added crypto into our offering. And we have had a lot of dialogues over the years. We were very early on, luckily started sort of discovering and trading crypto back in 2011, and then added it to our offering in 2013. And throughout that process, we've always had an open dialogue with regulators to make sure that we operate as a regulated entity, but offering our customers who on board with full KYC and due diligence and anti-money laundering checks, who provide them the ability to either trade in regulated assets or in unregulated assets. But from the point of view of how we manage our business, it's always been regulated and compliant, always making sure that we segregate our customer assets properly as required by regulation. So we basically applied what we've learned in financial regulations from the securities world to how we operate in the crypto world.
All right, so let's talk about some of the things that make it easier for retail investors to get involved and have brought this inflection point about. One of the things, as you mentioned, is being able to make trades without paying $7 or $10 or $15 in commissions each time. Is payment for order flow the only way to do that? How do you do it?
So eToro today doesn't have payment for order flow. We basically aggregate and internalize our customer orders. But just to note on that, there's a difference between the commission-free part of stocks and crypto markets or commodities or other markets. So it's not on commission-free stock trading, we're not adding anything, we're not charging anything. But on crypto markets, we are charging basically a spread, the same as we do in currencies or commodities. So there's
the market basically.
Yes. So there's always revenues to be generated through financial providers in this ecosystem. I think what commission-free stock trading, it took really out the ticket fee, which opened up for more people because, again, fractional shares and no ticket fee means you can suddenly open a trade for $10 or $50. So we can have a lot of these smaller accounts coming into the ecosystem. And through that, you have a lot more people talking about whether it's eToro's social network or other social networks or TikTok about what's happening in the markets. So the amount of discussion and social networking around investments have grew significantly.
So that's the other part of it that I find interesting, and I don't think people really give so much thought to, is the social aspect, right? The commission-free trades make headlines, fractional shares make things a lot easier, make it possible even, but the social network side of it, how important is that to your business?
So for our business as a social network, it's a very important part of our business, an integral part of our business. We started eToro to simplify the world of trading and investing. And what we've noticed early on is that people are hungry for knowledge, that they want to be more educated about decisions that they want to do. And we had chat features early on, and we've noticed that the main questions is always, what are you trading right now? What are you doing right now? How was your last trade? So we created in eToro the ability to basically see other people's portfolios. You can actually see the person's portfolio allocation, their historical trades. You can see their performance month on month, so the returns. So when you talk to someone on eToro, you really understand what is he investing in right now, what is his portfolio right now, and how has he been performing in the markets. We believe that social networking and a discussion, an open discussion around investing is very powerful as an educational tool for the investment markets. When I was very young, I used to trade, and I was in places like Yahoo Finance and Raging Bull, and I talked about the markets, but I didn't know who I'm talking to or whether you can trust the people on the other side. And that's really where eToro comes in to add that layer of trust, so you know who's on the other side and you can actually see what they're doing. But in general, through the internet today, and a lot of it is on social, but it's not only social, it's a plural of products, services, and information on the internet, the same level of information that somebody in a large bank used to have as a trader 10 years today is available on the internet for millions, tens of millions, hundreds of millions of people. But to find that information, to take information and translate it into knowledge, a lot of times you do need, training, assistance, talking to people, and that's where social comes in. People group together about a subject that's interesting for them. They can study and learn it together. They can share their ideas with one another. And I think that social discussion is a very big part of what we're seeing globally today. You have a very big social discussion on the internet about Bitcoin, about Ethereum, about various stocks, whether it's Tesla or whether it's Apple. And the dialogue, again, on various social networks, including eToro, is a big part of what we see as the inflection point in the rise of retail investors.
You can also make a great business case for having stars, right? Like in esports, for example, if I watch somebody play Call of Duty and he's amazing and I want to make all the same moves, translate that to investing, I can copy his portfolio and go out and sort of follow along with a superstar like that.
I'm a very big believer that there are a lot of talented people all around the world, not only in New York and London, who can consistently generate very good results by trading the markets. I'm actually proud myself, so my public portfolio is also public at eToro.com, Yoni Assia, so you can see my 10-year performance on eToro. But what we're seeing on eToro today, out of the 2 million funded brokerage accounts, we have almost 2,000 popular investors. Our popular investors are those who have both been curated and worked together with the investment team in eToro and are copied by our community. So when you see someone who consistently generated double-digit returns over time, you can actually click a button on eToro, say, I want to copy him with $5,000. It copies his entire portfolio into your portfolio, and every time he trades, it trades in your account at the same time, the same price, and the same proportion. So that's the unique patent technology called Copy Trader we developed. And that's a part of what I believe in, that again, there are a lot of talented individuals. It's not necessarily simple to make money by yourself in the markets, but if you devote time, if you're expert in a certain area, you definitely can share that knowledge. You can generate returns over time in the markets. And again, big fan of capital markets. I think that in a lot of places around the world, that common knowledge or understanding of how to generate consistent results in the market by obviously taking risk, by the way, so nothing is without risk, is something that the social network and the popular investors help people understand. Because when you look at our popular investors last year generated on average 51% returns in 2020. So when all of that is public and people can actually see those successful investors and can learn from them and talk to them, you basically educate more people about the value of capital markets.
Are you worried about the risk side of it at all? Because these are, for the most part, investors who aren't sophisticated, who don't have an MBA, haven't and don't work on Wall Street. Is there concern that, we're just in a very frothy market and at some point everything's going to come crashing down?
The first answer is yes. And we do a lot to educate our users about risk and risk management. Number one rule of investing is learning how to manage the risk. And the number one rule, in my view, of risk management is diversification, which is why we're always helping our customers understand and learn how to diversify their investments across uncorrelated assets. And I think a part of that, of understanding what's happening now in the markets, is to explain to some of our investors who are younger the potential implications of significant corrections in the market. They have seen it, by the way. The users who joined eToro during the first crypto rally of 2017 have seen a significant sort of crypto winter, right? Bitcoin going from 20,000 to 3,000. But I think today, when we're able to communicate with our customers directly to their phone, constantly provide them educational materials, I think gradually users are learning how to manage their risks. And I come from the point of view that it's important for people to understand how to manage their money. We spend a lot of our time working, and we're working amongst others, not only for purpose, but also to generate money. I think more people should understand and learn how to manage their money and how to invest in areas that they believe in, which is why we're seeing a lot of people also investing in ESG and purpose-driven investments.
Yoni, thanks so much for your time. Really appreciate it. Hope we get to talk again soon. Yoni Assia there is the founder of eToro, the biggest social investing network in the world.
What a joy it is to be joined once again by Sarah Levy, of course, CEO of Betterment, there since December 2020. And in and of itself, Betterment has been a driving force, a pioneer within the world of robo-advisors. So let's talk about where we stand at the moment, Sarah, in terms of how you're still seeing growth, how you're still seeing people coming to want to use the internet to manage their wealth and to build it.
So I think there are really two vectors of growth for us. The first is in the retail side, and the second is via employer-led customer adoption. And so if you think on the retail side, I think one of the great things that happened in the pandemic is that you just have a tremendous tailwind behind us in terms of curiosity and interest in people moving money onto digital platforms. And, we talked a little bit about it, but, not unlike e-commerce or other areas in our lives where we're adopting, hybrid solutions for work, this is true in the wealth management space too. So I think there's a huge catalyst there that's exciting. And then the second area that I personally am getting more and more excited about is really about how employers can help contribute to the financial wellness of their employees. And so how do we think about employers as partners in that long-term savings solution?
I think of 401ks. I think of the fact that I'm in a big employer that already offers that. Who are therefore the employers that you're looking to? Is it the more the small and medium-sized enterprises that before haven't had this sort of level of benefits because it's been too costly?
That's exactly right. So SMBs is our target, small and medium-sized businesses. Really, any business with fewer than, call it 500 employees can very easily adopt our product. And the product works for a small company as 2 employees and really can scale to enterprise. But I think, to your point, enterprise solutions have been pretty well served. But I think, the opportunity that's really interesting that we're thinking about and that has become a big thrust of our strategy this year is really around how do you think about this next generation when Social Security sort of can't stand up to the task of being a complete solution. And we all know that, the power of compounding and starting to save early is really important. And so there are 6 million small and medium-sized businesses in this country. And historically, employees of those companies, of which there are 60 million of them today, have not had the same level of benefits, 401ks and beyond, as big companies. And so the question is, can we help fill that gap with something that is, delightful, automated, low cost, and easy to use? And so we are.
Where's the competition in there?
So the interesting thing is that the larger incumbents can't really profitably serve this segment, and so they're not particularly interested because you really do need a digital solution. There are 2 or 3 other challengers who are seeing kind of the same opportunity that we see in this space. But I think we stand really tall relative to that competition because of our retail business. So the other competitors who are entering the fray here, and candidly, some are a little bit ahead of us and some are a little bit behind in terms of adoption. those companies are generally monoline offerings. And so what I think has been really interesting as we've done research with companies is they're looking at this kind of the great resignation and they're saying, how do I differentiate in the war for talent? And benefits can be a really big part of that. And so where we're stepping up is we're saying, look, there's a connected experience here between your 401k and your emergency savings plan and your retail investing solution. And if we can bring that holistic financial picture together for your employees, almost as really a gift with purchase, right? You're paying for the 401k, but you're giving your employees so much more. That's where our solution is really standing tall in an increasingly competitive environment.
That's really interesting. I'm interested in a competitive environment, what also you stand for as well. How do you have that differentiation when everyone's now looking at the field and when you're certainly obviously thinking about your own talent and keeping them there within this sort of time of great resignation, as we'd call it. But what about keeping your consumers really attracted to your product?
So, there's a lot packed into that question, I think, right? That begs perhaps a little bit of history. So when I think about the founding of Betterment, which obviously I was not a part of since I joined a year ago, right? There was a mission that I think remains resonant today, and that mission is around making people's lives better. So what we have done is really thought of ourselves, first and foremost as a place people can come to partner and to get advice on their long-term finances, right? And that's about diversification, that's about tax smart strategies, and that's about kind of what we used to say low cost. I think we're moving more to a conversation around value, right? Because I think low cost or the cost that is affordable with a digital solution, to me, is now table stakes. So the question as we go forward is, how do we take what was a great promise a decade ago and continue to innovate and bring sort of the trust of our decade of experience and then layer on innovation? And I believe that innovation is really all about personalization. And that applies, I think, both on the employer side and on the retail side for us. And so sort of the first thrust of that for us is, how do we expand portfolio choice? And how do we allow our investors to think about their values alongside their investing goals? And so that's phase one.
Yeah. Sorry, carry on.
No, I was going to say that, that's phase one, and ESG has been a big part of that for us, and we've seen really tremendous adoption of that product and sort of an evolution of who our consumer is as we've introduced more choice. And that's both about, consumers looking to marry their values to their investing solutions, but it's also because everything in life is becoming more personalized, right? And the beauty, again, of technology, the first thing technology did is it helped you lower your taxes and it helped you keep costs low. But the next thing it can do that I think is far more exciting is really about, how do we achieve financial independence for our customers? And each one of them has a different view of what financial independence looks like. And technology really allows us to adapt to those different needs.
Okay, there's a lot to unpack in that amazing answer as well. So first and foremost, let's dig in the ESG side. Who is that bringing in, and how are you ensuring that the ESG products that you offer are exactly what they say on the tin, and they're not perhaps, what I hate to say the word, it's overused, but greenwashing, and perhaps companies that aren't actually fulfilling the target you have personally in terms of where your morals lie?
So I think one of the common misconceptions about, what was called robo-advisors is that the whole thing is just technology. And in fact, there are a lot of humans kind of behind the scenes really doing analysis and work and constructing portfolios and rethinking portfolios and constantly sort of evolving on the consumer's behalf. And so ESG is in some ways like one of the prime examples of this, in that we launched originally 4 or 5 years ago, we actually launched an ESG portfolio, but about a year ago, we had been, studying the space and staying close to it. We actually split that portfolio and launched 3, one for climate, one for broad-based ESG measurement, and then the third around social impact. And what we're constantly doing in all 3 cases is actually evolving the ETFs and holding to a higher standard the ETFs that for inclusion in those portfolios. And so one of the things we did this year that was particularly exciting is we partnered with Engine No. 1 around their Vote ETF, which is essentially a market index, but with impact. So imagine you're a passive investor, but you want your voice to be heard. The inclusion of this ETF remains at the same very low cost as any market index, but adds the value of how do we aggregate retail voices and actually make change.
And do you see that happening? I had a great conversation with Jennifer, the CEO of Engine No. 1, a few weeks back, and talking about this time is now for not just institutional investors to, through perhaps proxy voting or indeed their own, make change. But I mean, the waves that Engine No. 1 created with the changing of the board of ExxonMobil, for example, how do you think retail investors are wanting to be part of that movement? Or will it always be that they will sort of put their votes within a so-called vote ETF that they can then see perhaps some action taken that they'd like to see?
Well, I think it's hard to see your impact on an individual investor level, and yet there's an incredible desire to be part of the solution. And I think that's, part of what's exciting about the millennial generation and the, Gen Z coming up behind them is their real interest in making an impact and having a voice. And, sometimes almost to the detriment of us, Gen Xers, right? In terms of, they want their voices heard and they want you to listen, and you have to listen. And so I think what Jen is doing at Engine No. 1 is really channeling that energy of the generation. And so the way we've partnered with them as one of their early retail outlets is we survey our customers. We survey the customers that hold these portfolios, and we ask them, like, what are the areas where you want us to fight on your behalf? And not surprisingly, climate is at the top of that list. Again, these are our customers are generally in their 30s on average, right? So that's a group who really, really cares about the next generation and their future. So climate is a place that we can sort of aggregate that voting power, and you can vote with your dollars, and you can give us, and we can give you a collective voice, right, through our knowledge of what you want.
We've seen also the power of millennial and Gen Z investors when it came to taking on the short bets. When we think of earlier in the year, I can't believe it's still sort of this year, but the GameStops and the drama there. But then also we've seen a real focus on crypto as well within that particular cohort. How are you looking at the offerings of cryptocurrency? Because it feels as though more and more robo-advisors or the Robin Hoods of this world have really benefited from that. How are you seeing as that an opportunity for you?
So, we've been, as we always are, we study for a little while, right? We want to make sure that we're making the right kind of long-term, diverse impact for our customers. And so for us, we've been doing a lot of homework. And I think, first of all, I personally do believe that crypto as an asset class is here to stay. And in a diversified portfolio, it's a responsible thing to think about how does that sort of uncorrelated asset to the markets, how does that, play within the context of diversification. So I think, that's the first lens we apply. And then the second lens that we're thinking about is how do we educate alongside, right? As many people as made money on all of that day trading and crypto, there's the other side of that story that I think is much less told, which are the people who didn't bet on exactly the right coin at exactly the right time and maybe don't have the money to lose, right? And so we don't want to pass judgment on people doing some of that gambling behavior, right? I think the fact of the matter is most of your money and your long-term savings should be in something diversified, but it doesn't mean everything has to be. And so if I'm a betting woman, we will consider inclusion of crypto, but we want to do it thoughtfully, and we want to do it consistent with our values, which is around diversification, which is around long-term, right, and which is around kind of a responsible allocation.
Let's talk about, actually, we're getting audience questions on this very note. Vincent asking that, financial literacy is such an essential to good investment decision making. How are you taking your user base on that journey of education? Is it having access to documents on the app or on the website? How are you ensuring that people do their own due diligence before they construct their own portfolio with you?
So this is a big part of what we're talking about right now a lot, which is we like to internally, we're calling it our guided choice framework. And I don't know whether that's sort of ready for prime time as it relates to narrative, but I think the idea here is how do we offer kind of tips and information along the way? And we've been having a lot of product review sessions talking about how do we surface performance information in an educational way, so that as we expand portfolio choice, customers have a really clear way to evaluate why they would choose, even if they're unsophisticated or newer to the process. Why would I choose an innovation portfolio versus an ESG portfolio? And so we'll talk to them about here's the show them metrics and show them relative risk reward, and kind of try to teach them about who is this for. If you are this kind of investor, you might think about this. If these are your goals, you might think about that.
Okay, interesting. And thinking about goals and thinking about who they are, I know that when you go onto the website, it's so great that you can see if I'm Latinx, how do I think about investing and focusing my wealth and the culture that I come with? I'm interested in how you see diversity at play within your consumer base and also amid your workforce too.
So I think for me, diversity starts with our workforce, and I'm proud to say we've had actually a really tremendous year in terms of rounding out some of the underrepresented groups from where we had been as a small startup, where you sort of get the folks in the door you can, and as you mature, there's really an ability to think more impact the product. And so I think what's been really kind of exciting is we're getting great new ideas. And again, I use ESG as the best example, which is we're attracting actually more women to the product through ESG than our typical investor. And so as we think about these other demographics, for example, Latinx and having multiple generations at home, you may have different savings goals in that context. And I think this all plays in beautifully to what is an increasingly personalized journey. So that's about demographics, that's about life stage, right? And that's about your view of your own financial freedom, right? Are you looking for a sabbatical in 5 years, or are you looking to retire in 20? We would make different recommendations to you and guide you different ways, depending on how you articulate your view of success.
And of course, that was all built on what the markets do up until then and how we're able to see wealth built. You, of course, came on board December 2020, and the market's been going bananas ever since. We continue to see record high after record high. And I'm interested as to when that sort of enthusiasm starts to pull out of the markets, when we start to perhaps lose that interest, that initial spark of I want to start putting money to work in the markets or investing or in assets because the market and assets cool down some. Is that going to affect the amount of people who want to come on to robo-advisors in general or want to invest, do you think?
Well, I think, the pandemic, we talked about at the top, the pandemic, I think, was a catalyst, generally speaking, for the adoption of digital products, throughout life. And I think that's completely true in wealth management as well. I do think that what will happen is that the sort of split and the mix of where those dollars are invested will shift, right? Because when people have time on their hands to watch daily, weekly, hourly, right, and they're making a lot, more investing moves, I think more dollars in that landscape, and with Reddit powering the discussion, right? Yeah. You have even more and more people kind of self-directing those investment dollars. But the reality is that on balance and over time, diversification really drives better outcomes. So what I believe will happen when some of the markets settle from what has been really like a frothy decade, right, is that people who don't have the time will begin to understand the asymmetry of information in a way that will sort of put more of their dollars to work, maybe in values aligned areas, but along in more kind of diversified portfolios. And that's really why we're sticking to our knitting as it relates to, diversification, tech smart strategies, and the power of compounding, right? Those are really your three ideas that should anchor any investment portfolio. And I think most investors will understand that and will sort of make choices a little bit differently.
And so as we perhaps see people wanting to bet on a single stock a little bit less, wanting to bet on a single crypto a little bit less, how are you targeting those people? Are you marketing? Are you going out to the Reddits of this world? Are you making your voice heard? How are you ensuring that you bring those people to your table?
I mean, in general, I think, we are in the process of building one of what we hope will be or what we expect to be, I should say, one of the great, financial services brands for this next generation. And I think, brand building has a lot of components to it, right? It's about talking to your customers. It's about building word of mouth, and referrals is a huge part of building a brand today. It's about, your voice on social media and how you, talk about your values. And I think values alignment is a huge, huge part of what, this generation is seeking. And I think we really deliver on that. Making people's lives better is a compelling mission, and it's true for us. And so, I think, we believe that, what's good for our customers is good for business. And we're a fiduciary. And I think those are kind of promises that will prevail in this next wave of growth.
Sarah, we got only a few seconds left. I'm sat here with this really jazzy background behind me. I'm fascinated by the background behind you. You're in the office. How busy is it at the moment? And are people coming back and wanting to get to work together?
It's gotten pretty busy. There's nothing like free lunch, and so we serve free lunch a couple days a week, and that gets folks in here collaborating and excited to be together. And I think our best ideas come when we're together. So we've adopted a kind of a hybrid approach, but 3 days a week we've got a good crowd. So I'm excited.
Go enjoy the free lunches. It's on a Thursday, right? You do Tuesday, Wednesday, Thursday.
Exactly.
So
come on down.
The throngs will be there. Sarah, thank you so much, as always, for your time, for your energy, for your focus. We really appreciate it here on, of course, the Bloomberg Financial Innovation Summit, and love to hear the path of innovation with you. Thank you. Stay well.
Welcome to the rise of DeFi. Where will it go from here? I'm Joanna Ossinger, markets editor with Bloomberg News, and we have a great group of panelists to talk about this. We have Camilla Russo, founder of The Defiant, Dmitry Tokarev, the CEO of Copper.co, and Stanu Kulichov, the founder and CEO of Aave. So let's get straight into the topic at hand. Let's talk about what are the best and the worst things about DeFi right now, best and worst. Cami, do you want to start off?
Sure. Well, hi, everyone. Great to be on this panel. Thanks for having me. Okay, so best of DeFi right now, I'd say the fact that, a big picture is that a new financial system is being built on open blockchains. Right now, what DeFi is doing is building a better financial system that's global, open, more efficient, more transparent. So to me, that's the best thing that's happening in DeFi at the moment. The worst thing is that we are seeing it just start to emerge. So it's been maybe 2 years since the start of this ecosystem, if you count Maker as the initial starting point. And so it's extremely early. And because of that, it's still risky. So it's still people who have capital to risk, the ones who are getting involved. So we're not seeing a huge impact on every people's lives. We're seeing lots of hacks, scams, because it is early. So I think that's kind of the downside right now.
Okay. Dmitry.
Yeah, I would say, the best thing obviously is the technology itself is extremely powerful, and on the horizon, like 5 to 6 years, 7 years, we'll see amazing things happening. I think the worst thing, on top of the things that, Camilla already mentioned, is the fact that the space remains still largely, unregulated. Well, almost in the entire space is unregulated. And the three pillars, essentially, that the regulators are looking after is, in protecting consumers and ensuring, financial market stability and, ensuring effective competition. There are already some things that, could be done within the DeFi. And the kind of largest three pillars of threat here, which is, security, AML and fraud. I think the state of the events today is that we're still seeing just the beginning of like how much of an impact, how much of a consumer harm it could bring, and it would be great to kind of a little bit for the entire space have more self-reflection and get public sector involved in essentially ensuring that things that we could be doing today we're already doing in order to make sure that it doesn't come down crashing on us, therefore preventing innovation.
Okay, and Stani.
Yeah, in terms of like what the benefits, I would say like the benefits of decentralized finance, especially I would say that, I mean, decentralized finance by itself, like it has a lot of characteristics that actually makes finance, I would say, a bit more fair to the participants and also like an ecosystem as a general. But also it provides an environment where you can constantly innovate more when you're a developer or a builder or a product person that just wants to see more efficient financial protocols and products. So for me, like the biggest, of course, value added is that, you have all this transparency involved. So when we look traditionally finance over the decades and decades, we see that finance is a bit something that has been always kind of like a black box, whereas in decentralized finance, you can see all the transactioning out there. So you can see the risk exposures that is, for example, in the Aave protocol, but also in the other protocols and in DeFi and the whole ecosystem in general. And not only this, all data and visibility is auditable by anyone, every single second, but also it allows to create risk mitigation tools that couldn't exist before because of the amount of information you have. And the permissionless nature of these protocols allows actually fair participation into finance. So whichever part you are connecting to, you basically have ability to have the same kind of like a rights to participate. So let's say yields from DeFi protocols are pretty much accessible to like a wider audience globally. And this brings more democracy and also finance kind of like as a human right. And then of course, like if there's the element of not giving custody and the kind of like a narrative of the same that we had in the crypto currencies where you control your own keys, you pretty much like can control your interactions with these protocols without actually giving your custody to third parties unless you really want to do that. So these are the very main things. I think like kind of like the downsides, as an innovator, I would say I don't see like pretty much like downsides when you have innovation. I see only challenges, and the challenges are here that how you educate wider audience in how they can actually control their finance and what it means to them when you have all these accessibilities and all these opportunities, and how you securely secure your keys and interactions within these protocols. So I think we have like a biggest kind of like a drawback now is that there's a big learning curve to interact with decentralized finance, but also to get that kind of like a knowledge and understanding what is kind of like a good DeFi and what is maybe a bit more riskier in terms of appetites. That's my takeaway.
Okay. So in terms of regulation for DeFi, which is a pretty hot topic right now, so what kind of regulation does it need, and who's doing a good job or who's doing a particularly bad job at that country-wise? So Dimitri, do you want to tackle that one?
Yeah, I think, generally speaking, there are kind of two schools here, is that, which I'm not disagreeing with like 95% of what, the guys just said. And I think, definitely, we will be migrating towards decentralized finance over the coming years. One thing is, there is the school of, there is your keys and you manage your keys, etc. And then, there is another school, which is like, there will be authorized participants. I don't think, the latter kills DeFi. I think the latter ensures financial market stability. I think, accessing DeFi market through authorized participants and which are, regulated, and the regulators can ensure there is a due skill and care in place. They're fit and proper to essentially hold such infrastructure, and then thus providing subsequently the access to the wider market. And I'll give you an example. What we're seeing today, right, is it takes you, I don't know, 20 minutes to find on the darknet database of people who are interested in crypto, and then it takes you another half an hour to craft an email, and which I can show you what it looks like, which is that one in particular is from Lazarus, the cybercrime unit in North Korea, to send it around and essentially saying, hey, why don't you update your MetaMask? Click here. You click the link and it delivers the weaponized payload, which essentially takes over your laptop. And then essentially you can sign anything you want anywhere you want. Now, the thing is, this is nothing to do with DeFi as such. We're still in the beginning of protecting the world. But this is the problem, right? Because in the end of the day, we have, our entire client base of professional clients, but, sometimes even on their side, and we've seen, especially with other players, they essentially lose access to their password. They lose access to their shards, and on that front, those are professional investors. When it comes to the average person, in terms of democratizing this, you cannot expect, a person who's not from the space, who's not from finance, you can educate them, unless you basically get to the level of understanding, which is, a case in digital asset companies. It's very hard to see this scaling without the participation of the regulators. But again, this is something which is, we already have the clarity, when it comes to financial markets, how this should look like. And the reason why finance as well, to a certain, as Stanley mentioned, is a black box to a certain extent, is they want to make sure that every single layer has the right controls in place so that it doesn't hit the consumer. Last point I would mention on this is that we are quite lucky so far that the space, DeFi space, largely consists of very good players, very smart people, the innovators, and the guys are building amazing things, but over the course of the years, you can expect that essentially, the fraudsters and other cyber criminals will be arriving to this space because they're going to figure out, well, hey, it's easier to scam people here than it's to scam people in the traditional markets. And if we go full on democratization, like here's your private key, here is everything, this is the prime feeding ground for these people. So, it just, in the end of the day, from the regulators, one requirement here is for consumers not to get hurt and to ensure financial market stability. I don't see this happening without authorized participation scheme.
Okay, thanks. Cami, what do you think?
Well, I have a slightly different view. I think just like my overall perspective on regulation in DeFi at the moment, at least in the US, that's what I know best. I think it hasn't been as clear and as fast as I think the space would have hoped for, and I think that really just hurts the US as a hub for financial innovation. I think there's been just this very loud stance from U.S. regulators about saying they will regulate DeFi, they will regulate crypto, but at the same time not providing clarity on how that will happen. And so that lack of clarity is what has the space kind of on this situation where builders don't know whether the U.S. will be a good spot for them to continue building. And I think that's hurtful for everyone. The other point, and this is like a very personal opinion, obviously, but I think people should be given more credit and to take their own financial decisions and do what they want with their investment. I agree there should be safeguards and there should be guidelines as to making sure that people are as informed and educated as possible with the risks that they're taking. But once they have those risks, once they know what they're getting into, they should be able to invest their money the way they want to. I don't believe that in the past, the way that U.S. securities laws have been set up, where basically just having money allows you to invest whatever you want. Like an accredited investor is just someone who has a lot of money. It's not someone who's especially educated or financially savvy. It's just someone who has more than $1 million in assets. So that's the entire requirement, or at least it was until recently. So I don't think that's where we should be looking at. And on the other hand, what DeFi allows is access to everyone. So I think that comes into contrast with what US regulators have done in the past. So we see kind of this discrepancy in just like worldviews. It's like DeFi is giving access to everyone to invest. And for the first time, anyone can become a VC, and anyone can get the high returns that VCs previously got in private markets and regular people didn't have access to. Well, now people do have access to that. And I don't believe that they should be protected from that. I think it's great that they do. So I don't know, my views on regulation, on finances and so-called protection to people is just very different from what US regulators have done. And I just hope that, you know, everyone will be able to access this new financial system, because it's incredibly empowering, the fact that everyone can now have control of their own assets for the first time, not rely on third-party custodians. I think that's hugely revolutionary. I think it's great that anyone, wherever they are in the world, can have access to financial services. And so, you know, as long as there is education and people know the risk, I think they should be able to do that.
Okay. And Stani?
Yeah, I think like kind of like when you look at like finance and how it's formed like over the times, there's definitely like different kinds of generational differences, because like if you look at in a whole society, how it's been formed. So for the past, let's say 100, 200 years, you know, the finance and the kind of like a industry as it has been shaping has been based on the fact that, you know, you are, as a consumer, you're basically earning your hard-earned income. You know, whoever you are, you might be participating in one particular job in the society, and you give your earnings to someone else that you trust, that are basically professionals, and they're managing your funds. And this kind of a model for the past, let's say, 100 years has been based also for the fact that, let's say, the whole society hasn't had the same access to information. So, for example, if you are not a financial professional, you might not have the access to understanding the markets. For example, the only thing you might understand is like you have newspaper with some financial news and so forth, and all the opportunities aren't shown for you, especially when the markets has been like physical markets where you have been trading stocks and so forth. So kind of like, and now we're in a society where this information is accessible to anyone. So anyone actually has an internet access. You can read about different companies. You can read about what is going to being built in the society, technology, and same goes to decentralized technologies. And we're kind of like, when we look at things like Wall Street bets and how the younger generations are actually using their finance, it seems that they want more control. You know, they want to decide what kind of protocols they support, and it's beyond finance even. So the support or investing is also based on values. You know, you might want to invest in different kinds of, let's say, green economy, or something that actually represents what you actually think it's important for the society. And decentralized finance and whole movement of blockchain has been about, you know, opening up these opportunities to everyone, especially because people have the information. They should have the ability to decide and what kind of protocols they are using. And I think the biggest thing that we need to do as, let's say, whether it's regulation point of view or society, is to educate in the level of, you know, what are different kinds of DeFi protocols, how they differentiate from each another. And I think we can do that. It's the same way, for example, as, you know, consumers has been educated. What's the difference between, let's say, you know, gasoline and diesel fuels, and, you know, and other things. You know, finance is just something that is kind of like, especially like decentralized finance is new to the society, and it just takes a lot of time. But you have seen already like movements where finance has been branch-based, and it moved to electronic internet banking, and now to mobile banking. And, you know, users will follow once there's a lot of abstraction layers that make that experience much more easier, but still gives you the ability to actually participate in permissionless fashion to these protocols, and at the same time being able as a user to govern these protocols that the users are owning. So I think it's more of a question of what's the future of where like regulators will be seen. And I think like the educational part plays the biggest role here.
Okay. So actually, we have a question from the audience here. Kevin wants to know, when do you think DeFi transaction costs will become reliably competitive with other market ecosystems like FX and equities, for example? Let's just do a quick hit on this. So just give me a time frame for that. Cami, go ahead.
I'd say very soon. I think it's already happening on some level in layer 2 scaling technology. So I don't know. I'd say like what's missing is volume, but I'd give it I don't know a few months, less than a year for sure.
Oh, nice. Okay, Stani.
Yeah, I would say the same.
Nice. Dimitri, anything different or same as well?
Not on this question, but in the previous question, I've got quite a few comments, if that's okay. So
go for it.
Look, I mean, we should look at the history. For the last 30 years, people do have access to the internet right now. They're not studying quantum mechanics. They're looking at TikTok, right? And if you spend some time on TikTok, look at what people are doing. Just the other day from the airport on my way here, I was discussing, how the driver put in $10,000 in Shiba Inu. Right now, there is a bus around London and in the tube station saying, "Missed Shiba by Flocky," And that sort of gives you a sense what sort of retail market, like consumer behavior you can expect, without actually, getting this in any shape or form regulated or putting authorized participants in. And by the way, I'm not saying like restricting access to DeFi. You can most certainly, for example, if you're a user of a neobank, and neobank essentially integrates, Aave, you can also go through that route, and you can also consume the products that basically will be launched on Aave, and then essentially invest through that. But then there will be qualifying criteria. There is a reason why today consumers, you can't sell them structured products, for example, right? But today you can literally sit with 3 developers and say, here's a structured product for you. So, there are certain things which exist for reasons. So I don't think it's black and white. I don't think like we should go on a complete tangent and say like, look, the traditional finance has got everything completely wrong. There is a reason why regulators exist. There is a reason why certain products are not offered to the general public, because educating them on structured products is like it requires years of experience, and it requires actually professional investment experience from their side in order to understand that if this goes there, then this is my payout, and this goes there, this is my payout, right? So there are systems already today through which nothing what the guy said is basically will prevent the consumer from having it, but there are got to be controls of some sorts to qualify the investors, and also on top of it to clean the market as well out of Shibas and everything like that. Because also I would say for 50% of the audience today there is no kind of understanding at large, maybe not for the audience here, but like Bitcoin, Ethereum, Aave, Solana, Doge, what's the difference, right? And like the differences are like absolutely vast. So without proper regulatory framework, without proper scheme for authorized participants to basically enable the consumers, I don't think we will realize full potential. I think as a matter of fact, it will stifle the innovation, because it's all going to come crashing down on us, and then it's going to be, okay, well, no one can do anything anymore. So working with the public sector to make sure that they understand first and foremost how everything is positioned, what sort of risk it carries, should be the primary goal. Giving everybody access to absolutely everything, like again, there is internet. Remember the time when we thought people lacking education because there was no access to information? There's Wikipedia. You can learn anything in the world right now. But what people are doing is essentially, dancing to music in 15-second clips, and that's what gets them excited. So that's a little bit opposite from Cami's point. Let's give people a little bit of credit. Like, well, yeah, sure, but like let's also look for the last 30 years and what happened.
But it's their money. If it's their money, if they want to put their money in Shiba, let them. Who cares? Like what? I mean, who is going to come and say this is good and this is bad? And who are they to know? Like what? Some U.S. some regulator in a closed room is going to decide what tokens people should invest in? That sounds like a dictatorship.
Level of understanding, absolutely, yes. Depending on level of understanding. There is a reason there are certain drugs you can't buy over the counter, right? Like it's people's body. Why not sell them everything? Why not legalize, heroin and everything else, and just give access to people, everything, they should be having access to it. But then it will result in a larger problem in the society, which is going to be...
Shiva, can't kill you.
I think
it's a little bit different.
And but this can wipe out your entire savings, and you might kill yourself. This is another situation, right?
Totally.
I could just mention that it's more about it's not about investing. It's about culture. It's about communities you want to participate. And if people want to support certain type of protocols, they can do that. If I buy a lot of, for example, NFTs, and I know they're just fun. There are memes, and I spend a lot of funds there. And it's just something it's about participating also in cultures. And when it comes to accessibility, the most best example of what can drive innovation a lot by providing accessibility is actually the internet, because that connects people, that drives innovation. It's all about creating those opportunities to everyone. And then rest is actually education and end of the day. People want to have control. That's about the freedom, not just only in finance. Internet was more about information freedom, to access to everyone. And financial freedom is pretty much like decentralized finance is doing, and bringing those opportunities to everyone. So everyone is on the same level, have the same access to wealth opportunities, and rest is actually on them. And then the community is to educate people. And that's the kind of role. And of course, regulators and so forth. And I think essentially what we're talking about here is a bit sure, there are crazy cases and so forth, but everyone should have the freedom, but everyone also at the same time needs the education. It's the role of the communities to do that.
Stunning, but you're one of the smartest people in the space. You of course can buy whatever you want, right? But
I'm not the smartest. I'm probably the dumbest person.
You're the smartest. I said one of the smartest. One, right? So of course, 100%. You're not going to go out and spend $1 million on something which you basically don't understand, or don't.
But I do that. I do that. I spend.
You do that. You do that.
I might
spend
$1 million just. Yeah, I do that because I want to support the community. I might not understand completely how it works, but I understand the community power and involvement in something. And I mean, it's not pure investment or pure finance doesn't exist. It's more about a bit of, let's say, finance, a bit of community, a bit of culture, a bit of trending. But investment is like that. People, let's say, buy Apple shares because they like the products, they like the culture, they like the innovation of beautiful products, and they want to support it. And I think investing and also finance, it becomes like that. It's not about any more yields and just making money. It's about making choices what you want to support as an individual and as a community and with your peers, and having this kind of a belonging and building things in the future. And I think that's important, a paradigm shift from old finance and old kind of way where there's information asymmetry. Some people know way more than most of the mass. And now people have that accessibility into information, and the information kind of flows more quicker to wider audience. Sorry for talking too much, by the way.
No, this is good. This is great. So actually, we have about 1 minute left. So I'm going to give that to Cami to answer. What does DeFi need in, say, the next 2 to 5 years to realize its highest potential?
Let's see. I think what it needs, there's certain pieces in place that are still missing, which one important piece I think is decentralized identity. And with that, I think that can unlock many other use cases that are not being fulfilled right now. For example, for under or uncollateralized loans, right now you need collateral because you don't have a decentralized identity. So this will be a key piece. And then related to what we were talking about, I think better in insurance mechanisms to make the space safer for everyday users. So I think DeFi deposits should be insured by default, and I think that's a big piece that's still missing. And then overall, just regulatory clarity is important. The builders not fearing that the SEC is going to come knock on their door the next day. That's the other thing.
Okay, great. That was the last word. Thank you so much for a great panel, Cami, Dmitry, Stani. Really appreciate it. Thanks all.
Thanks all.
Hello, I'm Ryan McCormick, factor and core equity ETF strategist at Invesco, and strategist for the Invesco QQQ Trust, one of the largest and most recognizable ETFs on the planet. We at Invesco are incredibly excited to continue our partnership with Bloomberg for the Bloomberg Financial Innovation Summit. And we believe that innovation is one of the driving principles behind Invesco's success. I'm pleased to introduce the next panel, Building the Digital Future. I think the title is very appropriate in this case because we're in the building phase at this very moment. We await decisions on the regulatory framework around digital currencies, potential widespread adoption and acceptance, the introduction of financial instruments that track the space in a variety of ways. It's truly a very exciting time in the world of digital assets. Now, this summit and the conversation focuses on financial innovation, yet Invesco QQQ does not hold financial companies in the portfolio. What we've seen over the last few years, however, is that the overlap between technologically oriented companies and financial companies only continues to expand. And the digital transformation that we're actively watching in the space is being driven by QQQ companies. We see it in the technology that fuels the ecosystem of digital currencies, technologies across the financial world, such as mobile payments, or technology used for digital currencies that have applications across other areas of the market. Blockchain technologies is probably the first that comes to mind. The blockchain has incredible potential to transform efficiency, reliability, and cost for companies throughout the industrial sector, the world of healthcare, and more. It has the potential for widespread application across our daily lives, allowing individuals real ownership of their data in a secure ecosystem, along with making the digital world safer for individual users and across companies and industries. One thing is clear, that the companies within QQQ are key stakeholders in this digital transformation and innovation across the globe. And it's truly exciting to watch the advancements and imagine the possibilities that the future can bring. I look forward to hearing from our next speakers, as they not only have a front row seat to the transformation, but are the creators and innovators of these changes and more. I hope all of you in attendance enjoy the program and the rest of the summit.
Hello, my name is Olga Karif. I'm a journalist with Bloomberg News, and I'm very pleased to introduce our panel. Here with me is Nate McCurry, head of blockchain and DLT at Splunk, and York Rhodes, director of digital transformation, blockchain, cloud supply chain at Microsoft. And of course, here we are going to talk about how companies use cryptocurrencies and blockchain. And, to start with, before we talk about how other companies use blockchain and crypto, could you each please tell us briefly how are your companies using blockchain and crypto at this point? And maybe we could start with Nate.
Sure, yeah. So at Splunk, we turn data into doing for all types of organizations, and blockchain is really a data-centric technology. So what we're doing is we're enabling organizations that are adopting the technology to really get the most out of it from a performance, security, stability, business insight capability.
And York?
Yeah, so thank you. So I started our blockchain journey here in 2015, so pretty early. The work that we've done historically has been mostly about enabling enterprises to cross the chasm from a tech perspective, and that includes all industries, similar to what Splunk is doing. And we've done it through various developer tooling, blockchain infrastructure, leveraging open source protocols on our cloud. We're watching the market carefully, obviously, with all of the interest in crypto, DeFi, and NFTs. And I think that we've certainly reached an inflection point in the industry, and I think for a lot of enterprises and brands as well.
And obviously, a lot of companies are deploying or thinking about these technologies. Could you talk a little bit about what is holding some of them back, and are these, in your opinion, sort of issues that can be resolved? Maybe Nate, if you want to start.
Yeah, sure. So I think what we should recognize first is that the what blockchain is enabling in larger organizations is really the increase in velocity in which you can do business. I liked the panel earlier when Hester Pierce was being interviewed, and the question was, the fact that it takes 2 days to settle Apple stock is bananas. And what we've already seen is the increase in velocity from the financial perspective of being able to transfer assets digitally, but blockchain enables much more than that. And organizations that can adopt this technology simply can do business faster and more efficiently. And the challenges that there's been challenges along the way, as with adopting any new technology. And some of these are around consortium challenges, which we can dive into, and the fear of working with public blockchains. What does it mean to put my organization's data on a public blockchain, which you don't actually have to do, but is a common misconception to date? I think largely it comes down to misconceptions that the technology is still way too immature, or there's too much risk.
Yeah, I think just to add to that, if we look at framing this as an innovative technology and a crossing the chasm moment similar to other innovation waves, I think we can learn a lot from those, just how long it takes to cross a chasm like this. You have the early adopters. Once it reaches a tipping point, it becomes sort of de facto. And when I say we reached an inflection point in 2021 with NFTs and DeFi and crypto, I think we're at that point where we've sort of moved beyond the early adopters kicking the tires of technology, trying to understand the technology. To Nate's point, the technology's been in the market for many years, and there's not really questions about how the technology works. There's certainly questions about what are the best use cases for both public and private blockchain approaches, and which are the best. But much like the internet, we don't run 100% of our business data over the internet. We won't run 100% of our business data on public blockchain either. We'll run the relevant parts of it where we need to.
I'd say, another one that comes into play there on the why isn't there more adoption, a lot of it comes down to the high variance of executive understanding. Some of our executive conversations, we kind of have to explain the technology, remove skepticism as much as possible, but you can't remove skepticism until you really understand the technology. And those executives who have dug in and started to kind of understand, they are recognizing the business potential and impact. And I think what I'm seeing is they're starting to get ahead of their vendors and peers. And really, this is, I think, something everyone goes through. I went through the same thing. I was very skeptical of this technology for years.
Yeah, I think you brought up two really good framing there. One, the move from fear of the unknown through education to a business imperative is the journey that I see executives go on. And depending on how much time you take to study, that will determine how long that little journey takes, right? Whether it's weeks or months, will help you understand, how does it get to an understanding of business imperative. I think one other data point here is that fear of the unknown and fear of business disruption is a very strong lever that most people who have I already know how to do my business mindset will lean upon. And you can look at this in, just purely from a revenue perspective. If you've got a very significant revenue line, the last thing you want to do is disrupt that revenue line. And so that's a fear of the unknown and fear of innovation. But once you go on the journey, then you realize it becomes a business imperative, and fear of being disrupted is where you wind up. So it's a pretty interesting, crossing the chasm moment, right, from an understanding perspective that gets people there.
And York, could you talk a little bit about things like, stable coins, NFTs, how are they disrupting the industry, and how can companies sort of incorporate them in kind of interesting new ways?
Yeah, Nate mentioned earlier just existing payment rails and time to settle. Stablecoins give us near real-time settlement. They're built on blockchain. There are various different ways that you can actually define a stablecoin based on a bucket of reserves or algorithmically or what have you. Some are more risky than others, but there are some regulated stablecoins out there today already, which can be used for essentially payments, right? And if you think about why a stablecoin is necessary in this type of market, you need a stable value coin, which is why it's called a stable coin, right? You need something that costs you $5 this week as it does next week to buy a cup of coffee, right? It should not be a like that. On the other part of the question around NFTs, we're just literally scratching the surface of what NFTs are today in probably 90% of the NFT projects. NFT is a very interesting programmable digital asset that can represent many different things. And it can also represent abstract things like entitlements. A ticket to a basketball event, for example, is an entitlement, right? It's something you hold for a period of time, which gives you access for a specific event.
And Nate, what about, what's your view of how NFTs could be used, for instance, for rewards or for, tickets?
Yeah, I have 2 points. The first one, it comes down to Mark Andreessen famously said years ago that software is eating the world. The ability to digitize physical assets and such even physical contracts and digitize so much more in the form of NFTs is going to make software devour the world. It's going to make us be able to do the business just so much faster. The fact that you can take things like stablecoins, put them in an escrow, have a smart contract, execute business logic that is tied to physical things like potentially even like proof of reserves in your organization, it just unlocks massive business efficiencies. One basic thing it will do that's easy for people to understand is we can move from net 30, meaning 30 days, to 30 seconds. With guarantees that you're going to be paid.
And York, what about can NFTs be used in marketing, advertising, and and how? What might it look like?
So I think we actually see a lot of brand marketing experiments today in the NFT world, whether it's McDonald's or Burger King or even the Microsoft Windows 11 launch had an NFT as part of it. And what just as an example, the Windows 11 NFT that was part of that live stream and launch wildly exceeded the engagement parameters that the marketing team expected it to achieve. And this is not generally a crypto audience, right? Somebody who's using Windows 11 and being excited about Windows 11, right? So that's a pretty interesting data point just from why this technology is interesting. If you go beyond sort of the marketing stunts, that these objects are transparently held in the wallet of a consumer, and this gives us insights into consumers. What are consumers' backgrounds? What are the consumers' interests? What have the consumers achieved from a certificate or even a game level up perspective? And how can you blend those things together, both from physical world things like, I have a certificate, an academic certificate from a college, for example, to I've experienced a certain level in a basketball game like Xbox, NBA 2K, for example. And those things can be combined together to now do additional things. And so one of the interesting things that I think we have seen in some parts of the NFT market is just this recognition that these open, transparent assets that are held in people's wallets can now be gamified and combined together across brands and start to actually have interesting mechanics and logic that unlock additional things, right? And so I think we're going to see a lot more of that than we see today.
Just looking at some of the barriers that perhaps enterprises see in adopting all of this technologies. One is sustainability, and this is something that Elon Musk has raised a lot this year. But people worry about sustainability of everything related to crypto. How do you think about that concern, and will this hold enterprises back from adopting this?
So I think there's a couple of different kinds of protocols that have different carbon footprints in the crypto space. I think the types of things that you hear people pointing to mostly when they talk about sustainability is it's being used as a defensive mechanism for those folks who are fear of the unknown, right? And to the point in the conversation we had earlier, like starting with, I can't do that because I don't understand it, so therefore I need to create fear, uncertainty, and doubt about it, right? So sustainability is one of those bogeymen that allows you to do that pretty easily. However, if you study the protocols, you can actually do very real calculations about what different protocols actually cause in terms of workloads, and then you can compare those workload carbon footprints to other common things. So for example, if you take sort of the future of Ethereum, which is going to a proof of stake protocol, and many others in the market that are running proof of stake protocols, and you measure the carbon footprint of a proof of stake node, it's a very, very, very low footprint. And so we recently did some calculations on behalf of brands that want to do NFTs. And one of the data points that we came up with was, let's assume that a brand is going to issue 12 million NFTs in a year. What is the carbon footprint of 12 million NFTs on a proof of stake network over that course of that year, and how does that compare to something else in your real life? And so the comparison is that basically 12 million NFTs plus transactions and trading those NFTs is no worse than the backyard barbecue that you actually fire up with your propane grill for a year. So, those types of data points where you can say, well, you never think twice about using your backyard barbecue powered by propane, right? But all of a sudden you're worried about an NFT and the carbon footprint on an NFT. It kind of takes a little bit of wind out of that argument. But again, I think it has to be based on objective data and calculation. So I'm actually working on some blogs with some third-party verification from the Rocky Mountain Institute, where we'll be publishing this data as well.
And to just add to that, the blockchain and crypto has been the fastest innovative technology ecosystem that I've ever experienced in my lifetime. It is so rapid. It's unbelievable. And what's interesting to me is there are people that want to solve challenges so badly that they'll put all of their mind and power into it. And so energy sustainability is actually, there's a lot of people who really care about that. And so they're innovating. And this is the same thing with speed of transactions. So just like the internet, people said it'll never do video, and here we are, audio and video. They didn't understand that people would work hard to solve those problems. So not only are we seeing a new consensus mechanism, such as proof of stake, that are more green, we're seeing things like proof of space and time be created. So tomorrow, Chia has a panel, and they built a consensus mechanism that's maintains Nakamoto consensus, but is more green. So I think that it comes down to their tools for fear and uncertainty, saying things like blockchains are slow, they're just another database, they use a lot of energy. Those are usually people that don't understand where the technology is headed and already is existing.
And Nate, you mentioned earlier about this trend that we are seeing of companies starting to use public blockchain versus private blockchain, which they control. But now a lot more companies are looking at the public blockchain for deployments. And I think one of the concerns they might have with that is sort of how do you deploy on a public blockchain safely, securely? How do you think about that? And how it can be done?
Absolutely. So I've talked about this years ago at our first executive summit, that a holy grail for enterprises is to be able to synchronize business state between suppliers, vendors, competitors, and really anyone the organization is doing business with. And the thought process years ago was, let's form a consortium that we can keep our data as siloed as possible and try to work things out. And there are a number of challenges with that. It does work, but it's really hard. The reason that there's many reasons they didn't go to public chains, but one is the fear of putting data out publicly. Every major organization has security, compliance, and risk departments, and sharing data is a very challenging thing. Fortunately, as I mentioned earlier, kind of when there's a will, there's a way. And one area we've seen massive innovation in the past few years is along zero-knowledge proofs. The zero-knowledge proofs allow organizations to use their data without revealing it. And to me, this is as massive of a upgrade as secure HTTP was to the web. So before HTTPS, you couldn't really safely do any sort of transaction. You couldn't buy a pizza. You wouldn't be able to get an Uber. Someone else could hijack your emails. But HTTPS allowed information to be transferred without being revealed. And zero-knowledge proofs, it allows information to be used without ever being transferred. It's quite remarkable.
Yeah, I agree with that. Yeah, I was going to say, I 100% agree with that. Zero-knowledge proofs is on the very bleeding edge of what's possible, and it's quite remarkable that the statement that Nate made, which is like you can use the data without revealing it, and you can use the data with other parties without revealing it, and that's really what zero-knowledge proofs does. And at scale, that enables you to do things with your data that you would never have thought of doing before in terms of collaborating with other parties across a public network, like a public blockchain network. I think the other data point that's really important here that we sometimes just gloss over because it's so baked into the nature of what blockchain is, doing blockchain transactions is way more secure than the things that we do today. So for example, if I'm sending proprietary data to a supplier and the supplier's name is, say, Lenovo, right? And by mistake, I type a different name, right? And maybe it's the name of the person, and the person's name is Sam Altman, right, who works at Lenovo. And by mistake, I pull up Samsung, right? Now I'm sending the data that should have gone to Lenovo to Samsung. That data is sent in an unencrypted way to the receiving party. Right? When we do blockchain transactions, we secure everything for an audience through a public-private key encryption mechanism, similar to that technology has been around for decades, right? And it's just never scaled the way blockchain has enabled it to scale. And so these types of transactions that we do in blockchain, whether it's in a private blockchain or a public blockchain, are actually way more secure than what we're doing today.
Yeah, and in fact, we live in an era of data breaches. It's likely that all of us have had data breached multiple times. We don't really want to share all of our information with all of these vendors and customers and platforms. They only need to be able to access it and reveal information about it. For example, if you go to apply for a loan, you should just prove that you have the appropriate amount of reserves or bank account statements. You shouldn't actually have to reveal the actual numbers. And same thing with large organizations who are audited. They're really giving auditors the keys to see everything that they have, and there's a risk there that that information could be leaked. Rather, with this technology, you could prove your reserves, prove you're meeting regulatory requirements without actually being having as much risk of data breach.
Another great example there, by the way. Sorry, let me jump in on that. KYC, right? So KYC is a whole bunch of personal data about consumers and financial data about consumers. But what a bank really needs to know is, is this consumer who they say they are, and do they pass a certain risk profile, right? Those are the two things that you really need to know for KYC. You don't need to actually know all the other data. And in most cases, say when a consumer is applying for a loan, for example, that data may have already been run very recently by someone else. So another thing you might ask is, when's the last time this person was KYC'd? If you have those three pieces of data, you actually have the risk profile you need for KYC, and you don't have to go through the information, archives in the same way.
And obviously, all of this kind of different capabilities of blockchains and what they can do, they also can give rise to new business models. And we see this in consumer applications a lot, for instance, play to earn games, right? And I was wondering, how do you think this type of new business models that we see rising in the consumer realm, how could they potentially transfer into the enterprise space?
So I think there's a lot of work still to do in gaming, for sure. There's also different types of regulations and concerns in gaming as well that have to be paid attention to. But I think that, largely, again, I mean, we're really just scratching the surface here across a number of different categories. That the ability to interact on digital objects and facilitate different types of consumer engagement transactions, like a game, for example, is pretty vast. And you do see the play to earn games really on the forefront of this, like thinking about how games can actually have an impact on people's lives in a very meaningful way. And Axie Infinity, as an example, has achieved a remarkable humanitarian problem where 24% of their users were actually unbanked. And now are actually making a living through the game. Now, as I mentioned, there's a lot of other problems with play to earn, but just solving that one humanitarian problem with sort of unintentionally through a game mechanic on NFTs is pretty remarkable.
Yeah, and I would say what new things are going to be possible, what new business models. We're not yet in the blockchain native era for large organizations. We're in what's called the skeuomorphic era, like Chris Dixon likes to say. What that really means is we're trying to look at how the world used to work and kind of replicate it in this new with a new technology in a slightly better fashion. And that's why we see so many of these initial use cases doing things like increased business efficiencies, more visibility for supply chains. But ultimately, we're going to see new business models that really we couldn't even think of. Just like when the smartphone came out, people thought that's a really expensive phone. They didn't realize what could happen when you combine new tools such as GPS with effectively a mini supercomputer.
Yeah, and by the way, just as a reference point for skeuomorphism, that was a Johnny Ives, who was the chief designer for Apple, construct that allowed people who didn't understand native digital things, like a clock that has a number. The original design was to actually have something that looked like a physical object. So on the original iPhone, you saw a round clock, right, with a little ticker that's going around, and that helped people understand the navigation of what does this mean in a digital construct.
Sort of obviously all of this means a lot of change for a lot of companies, and there are a lot of questions about how much exactly this will cost, what is the ROI, and I was wondering, can you share your own sort of experiences with that?
Yeah, I mean, we've used internally at Microsoft, we have two public case study references that are in different lines of business. One is in the Xbox royalties team, and then the other is in the cloud hardware supply chain group where I work. And so both of those are achieving significant benefits for the businesses. In the case of Xbox royalties, they've taken what was a 45-day essentially settlement of data cycle down to minutes. And so game publishers who receive royalties are getting near real-time data about those royalties. In the cloud hardware supply chain, we've been basically tracking using NFT tokens in a private context, serialized high-value goods. And through doing that, we've actually calculated that we can save about $25 to $50 million per year just by doing this, because it actually gives us data that we don't have visibility to today. So those are two public case studies, for example, in different lines of business at Microsoft.
And that's a huge win right there, an example of efficiencies that can be gained. And I think a common practice is to recognize there's two types of ROI. There's return on investment and there's risk of innovation. And too often with new technologies, there's a large focus on initially the return on investment. Am I getting the return on investment? So when businesses first started buying T1s to connect their business to the internet, it was extremely expensive and they expected a return on investment in the first month. And what they realized over time was they were actually gaining efficiencies and value across the business, and it was hard to actually measure. So the term I like to use sometimes is also analyze your risk of your return on innovation or risk on innovation, because if your competitors are slowly gaining more business efficiencies over time, you don't want to wake up one day and realize, oh wow, we are way less efficient than all of our competitors, and our customers don't want to deal with us because we're too slow.
Absolutely.
You asked an earlier question also that that I was reflecting on it. There's going to be a significant change in social media, which are basically Web 2 style experiences where they're really walled gardens, right? Like you can't carry your data from Twitter to Facebook to Weibo and WeChat, right? They're all walled gardens. And they also generally monetize based on consumer data. And so what's going on at Twitter and Reddit, as examples, are really rethinking their business models around this open blockchain ecosystem where the consumer's data is not part of the revenue model. So it's really interesting work going on. I was actually just reading a Twitter thread on Reddit this morning about this.
And at this point, I mean, obviously, and like Nate said earlier, this is, a very disruptive sort of technology. So do you think pretty much C-level executives are thinking about it, and sort of is it on the C-level discussion right now? And is it the sort of technology that's being sort of deployed company-wide or very selectively at this point, or how do you see that?
So I think we're still at the fairly early part of the journey. However, one of the reasons why I mentioned the inflection point in 2021 is because of this brand utility that people are getting from NFTs, which is basically public blockchain, there is definitely C-level awareness and push to say, hey, what is this? Why is our company not doing anything in this space? What should we be doing? And really charging the folks in their business lines to figure out how this technology can be interesting for the organization. Classic example I think we see already in the market is Facebook's renaming to Meta. I think it's an unfortunate name, but certainly that's a recognition of the metaverse more broadly. Now, I think Facebook has a very specific view on the metaverse, but certainly when we talk about the metaverse and the blockchain space, it is everything we've been talking about today.
Thank you. And Nate and York, thank you so much for your time. It's been so fun to talk to you about all of this. So appreciate it.
Thank you.
Absolutely.
I'm Bloomberg Quick Take anchor Katie Greifeld, back again, joined now by Anatoly Yakovenko. He is the founder and CEO of Solana Labs. Solana is one of the fastest growing blockchains out there, often viewed as a rival to Ethereum, which is currently the most used network for applications like decentralized finance and NFTs, which we've heard plenty about over the past few months. Now, Solana is often pitched as a faster and cheaper network to transact on, but it's run into its own share of hiccups. Notably, it was down for 17 hours in September. And Anatoly, I can't wait to get into all of that, but I want to start big and ask you what the long-term vision for Solana is, both within the cryptocurrency ecosystem and beyond that.
Awesome to be here. Yeah, and I'd love to share the vision. So I think the magical part about cryptocurrencies isn't like the layer one tech like Ethereum, Solana. It's the actual people empowered with cryptography. Prior to cryptocurrencies, the best you could do was PGP with emails, and it was just really extremely user unfriendly. Nobody ever used it, and it was basically something that only like the geeks cared about. Like, how do you encrypt messages? Why do we need to care about this stuff? Mm-hmm. And the attachment of value of money or financial assets, or even things like NFTs, really makes people care about those keys and being able to use them and sign them. And that idea of 1 billion people that are empowered with cryptography that can now participate and coordinate with governance around art, around funding or assets, or create their own currencies is really, really wild. Right now there's maybe 3 million people altogether that use these networks, really use them, not just hold assets, but like actually sign things, sign messages on Ethereum and Solana all combined per month. Imagine that being 300 million. Like that, that's just going to really transform the world, how we do finance, how we do art, how we do everything. So the vision for us is to be that cheapest, fastest, easiest to use place for those folks to do that.
And I'm curious, how do we go from 3 million people who really use these networks to 300? How do you scale that?
Yeah. For us, like we're just trying to make it possible, like from a technical perspective, by building the cheapest, fastest network that can handle those messages. I'm an engineer that spent most of my career at Qualcomm, so I was there in those flip phone days, if you remember, like 2003.
Vaguely,
yeah. So this will date me a bit, but I remember getting when we were building the first mobile application platforms like Brew, nobody believed that people would want to have browsers on their phone, build applications for phones, and now that is the biggest industry in computing. So it's going to get there. We just need to start building applications for humans, so they do stuff that's useful to them. I think NFTs are maybe like the closest example to that, because it's effectively these miniature social networks that spring up overnight. And these social networks can monetize and operate without the use of ad exchange. It literally excludes Google and Apple from making money. That's but they're valuable and they're growing, and that's a cool thing.
And so there's a lot to dig into there, but I want to first focus on the faster and cheaper piece that you mentioned when it comes to Solana versus maybe some of the competing blockchains when we think of Ethereum and Bitcoin itself. I'm curious, what is the differentiation there? I mean, how do you become faster and cheaper and get away from those high gas fees that anyone who spent any time around the edges of cryptocurrency has probably heard about?
Yeah, this is, I'll try not to get too technical, but we had this thesis because my team and most of the folks that joined me were former Qualcomm engineers, that the most interesting part about these networks is this idea of censorship resistance, and not in like a political way where I'm censored to post a message on Twitter or something like that. It's in the kind of communications, radio network Qualcomm way, where how do I guarantee that when I send this cryptographic message that means something, right? Whether it's an NFT transfer, a currency transfer, or access to a market, that it arrives everywhere in the world as fast as it can with some real-time guarantees. So if you're building for that, right? If you're really like, how do I make sure that this is as cheap and as fast, it can handle the highest throughput? There really only is one approach to do that, and that is to optimize it with hardware, like to leverage as much of bandwidth, as much as Moore's law, as much as compute that you can get out of graphics cards or whatever, to optimize and make this thing as efficient as possible. And Solana is the only protocol in this cryptocurrency sphere that is optimizing for this idea of real-time censorship resistance. So early on, about a year and a half ago when we launched, the first partners that we talked to were folks coming in from traditional finance or cryptocurrency finance like FTX, or traditional finance like Jump. And if Solana is optimized to its kind of most theoretical limit, then information that passes through this network travels as fast as the news. So when a trader is looking at some Bloomberg terminal, right, and they see that news wire pop, when they look at a market running inside Solana or a market running on NYSE, that prices are already reflected in both. So for all the newsworthy events, a decentralized, open, permissionless marketplace can be competitive with a centralized one. There's no arbitrage between the two. But the costs are negligible, right? There's no central company that's running them. There's nobody that's saying who can get access to the data, who can't, who can trade, who can't. And that idea of opening up markets at a global level, to be synchronized within 120 milliseconds or something like that, is a pretty wild one, right? So just on its own, that's kind of an interesting thing. So in those early days, FTX and Jump and a bunch of other partners really bought into this vision, and that kickstarted Serum and a really rapidly growing DeFi ecosystem. And you can't really build this, you can't build these guarantees without just betting on hardware. That's really the only way to do it.
And so you brought up DeFi, and we know that there's a lot of DeFi activity, a lot of NFT activity already happening on Ethereum. So I'm curious, how do you populate Solana with apps? I mean, what is your pitch to bring developers to the Solana blockchain?
So one interesting thing about Solana is that it's not EVM compatible. So it's actually built using more traditional tools like LLVM. So developers coming in from traditional, trading shops that have, been trading options or something like that for the last 5 years, they're familiar with C++. To them, jumping into Rust and building a new application is something they can do over the weekend, basically. So in the hackathons, we've seen folks out of the Chicago finance scene build very sophisticated, permissionless options or perpetuals or whatever have you, protocols in a span of a hackathon, like 4 weeks, and really go from nothing to a product that's running on mainnet, in some cases with, $1 billion more of TVL in a matter of weeks. So that kind of iteration is possible by using modern day tools and really, really cheap to use, fast network. So it's kind of growing on its own. And the only thing that we really do at Labs is just really try to unblock people. Do they need documentation? Do they need, maybe libraries that make their job easier and things like that? But for DeFi specifically, that's got that ball is rolling on its own. So we're not even, the stuff that we're working on is more things that aren't, set up yet.
And so I want to get into the layers here, because when we think about Ethereum, we know that a layer 2 is being built on top of that network. And I'm going to ask you to explain for our audience and myself really what that means. But my understanding is that it's going to help lower some of the transaction costs, maybe increase the throughput for Ethereum, which might make it easier to build apps on it. And I'm curious, why should developers build apps on Solana versus Ethereum on the layer 2?
So this idea of a layer 2 comes from really a different vision of what Ethereum's trying to build towards. You can kind of think of it as, there's this trilemma that Vitalik said, but I don't want to have a trilemma named after me, but there's some trade-offs that exist between maximizing the size of the network, guaranteeing that those cryptographic messages deliver to the entire network, and the cost within some short amount of time, and the cost of the hardware that you're using. So Ethereum is not designed to guarantee that when you send that cryptographic message, right, when you sign with Phantom or some wallet, that it arrives globally within 400 milliseconds. That's just not something that they care about. Obviously, that's really important for anybody that is thinking about markets and finance. I want all the data that's guaranteed to arrive as fast as I can. So this is what Solana is built for. And if that's the goal, then you really have to spend some money on hardware. And that's the main difference between Ethereum and Solana, is that they fundamentally have a roadmap that is trying to minimize the cost of hardware. And that's totally fine, but there's definitely trade-offs there. So a layer 2 solution helps reduce some of those costs, but it does not improve latency. And overall, the fees to the user are probably going to be higher on Ethereum. And one simple way to think of it is Ethereum is sharded. So it's a bunch of small pipes. If you have 100 pipes that all do 100 transactions per second, pricing in each pipe is based on congestion within that little pipe. Solana aggregates all of this into one giant one that does 10,000 transactions per second, rated to 50,000 in our last tests. So it takes a lot more demand for you to start getting congestion, which then has to increase fees. So that's kind of like, a very simplistic point of view, but it's a different use case. I always thought of these things being almost complementary, that you can think of Solana as where execution and clearing happens, and Ethereum is where settlement happens.
So it's not necessarily one pitted against each other, or it shouldn't be in your view.
Yeah, yeah. The media really likes to have this idea of Ethereum killer.
I'm sorry.
No, it's fine. The reality is that like these are all open source projects. So there's people that work on this stuff for the fun of it over the weekend. And the mistake that Microsoft had in the 90s, this idea that they could kill Linux when, like in reality, people are just going to keep building it because they think it's fun. So that ship has sailed of somebody being able to kill Ethereum. I think that's basically sailed for Solana as well. We see so much external developer-driven activity that I don't even think that I could stop it. Mm-hmm. So that to me is a really, really good sign that both of these ecosystems are going to grow and thrive and continue kind of building for their own visions.
And so I want to go back to your vision that you said at the outset for Solana, which sounds like a big part of it is getting traders around the world all the information that everyone is getting at the same time, basically, to open up markets. And that phrase, open up markets, it got me thinking beyond cryptocurrencies. I obviously associate Solana with crypto and all the different coins and digital assets you could trade. But I'm curious whether you have ambitions beyond crypto assets specifically, whether you'd be able to trade traditional financial assets on Solana in your long-term vision.
This is what I thought of initially. In the seed level slide deck, it literally said blockchain and NASDAQ speed. And I had this vision that we're going to kill NASDAQ. I think the reality is that the crypto space is going to outgrow traditional markets without even moving anything over. So some of the things that I believe are competitive are actually ad exchanges. The exchanges with the most users are the ones that Google and Facebook run. There's millions of people who they mine their data, right, and then sell that slice of pixels within 300-400 milliseconds. So when you see things like NFTs or these social networks launch and cryptocurrency on blockchains, these are effectively social networks. They don't steal anyone's data. They don't monetize you as a person. Just owning that NFT and trading it within that network is what generates revenue for that community. And it's completely excludes Google and Facebook from making money. You can think of it as like that crazy idea in the 90s of a Microsoft tax-free personal computer, which was the meme or the religion that, got all the Linux folks to build this stuff on the weekends for fun, right? So that idea of everything being a marketplace and being a true peer-to-peer, non-parasitic one without any intermediary that's really taking advantage of the community is a really powerful one. And I think that these marketplaces will just simply outgrow the traditional ones because they're they move a lot faster, they encompass many more users, they're more interesting. So the stocks are going to stay on New York Stock Exchange, but like buying spaceships and tokens for DAO and Sidestar Atlas, all that stuff is going to be on Solana.
Well, I look forward to that future where I can buy a rocket ship on Solana. But I have to ask about September's outage, which I said in the intro lasted 17 hours. I know that Solana took a lot of heat for that. And the Solana status Twitter account promised a detailed post-mortem. So first of all, I want to start with what, in your view, first of all, led to that outage, and what did that post-mortem reveal?
Yeah, there's been a couple written by our partners that are like deep in the weeds on running the network. So Solana Labs just writes code, right? We don't actually run the network. There are, close to 1,200 validators that run this network independently. In that event, there was effectively a flood of transactions that were trying to snipe orders in this marketplace for this IDO launch on Radium called Great Protocol. I don't even know what Great Protocol is, just some project, right? But people started writing bots to start optimizing and get those orders ahead of normal users. And there was about a flood of like 500,000 requests per second, like requests to be included in a block. And it overwhelmed a bunch of the validators and caused them to start running out of memory. and unable to catch up until the community decided that it's easier to effectively change the ID of the network to prevent all these forks that were generated from being considered valid and just switch forks. And this is a process that doesn't involve Solana Labs outside of just doing analysis and maybe pushing a patch. And it's run entirely by the validators. And the core part of what makes these systems decentralized is that out of this, 1,100 validators plus 800 or so application servers, you only need one valid one to continue in a kind of a catastrophic event. So as long as one valid one survives, the network will continue. And from an applications perspective, it looks like there was a 17-hour block. So our joke is that we want to be the fastest block time, which is 400 milliseconds, and then the slowest one, because we got to be best at everything.
Well, Anatoly, we're talking now, it's early November. That outage, it happened in mid-September. I'm curious what the fallout looked like, whether you lost any users or developers as a result of that.
No. Yeah, it looks like everything doubled since then. We had 600 projects that finished for the Ignition Hackathon. Phantom looks like is adding 100,000 users a week. And this is because of this core principle of decentralization, that as long as one valid copy survives, that there is no loss of state. So that's the catastrophic thing is that, like you look at Bitcoin, there's 14,000 nodes. How do you destroy Bitcoin, right? Is you destroy all 14,000 copies of the ledger and poof, it's gone, right? There's no more Bitcoin. Nobody can prove who owns what. So it's as simple as that. So this idea of maximizing the size of the network, right? Actual full copies. That's really the core part of decentralization. And Solana is designed to do that, plus this guarantee that messages arrive within a short amount of time. So at the end of the day, as long as the protocol and the network and the community succeeds there, it doesn't really matter if there's a 17-hour outage or not.
And I'm sad to say we have just about 30 seconds left, but I'm curious, as we head into year end, into 2022, what's top of your agenda?
Oh man, how do we get 1 billion users using cryptography? Like that's that's the $1 million question, I guess.
And if we had 20 more minutes, we could go into that.
Yeah.
But I'm pretty sure we have to leave it there. Anatoly Yakovenko, founder and CEO of Solana Labs, thank you so much for your time.
Hi, my name is Eric Balchunas. I'm Senior ETF Analyst with Bloomberg Intelligence. I'm here with James Seifert, who is my colleague and also an ETF analyst. We work on a team of 4 people who cover ETFs across the globe and funds. We cover mutual funds, closed-end funds, and really anything that's a fund we will cover, although ETFs are our predominant coverage area. And look, this is a financial innovation conference, and you got to think ETFs are a very innovative tool. And a lot of innovation happens in ETFs. I frequently call the ETF market the Silicon Valley of the investing world. So let's start with the flows. We look at ETF flows this year, $722 billion into ETFs. Just to put that in, that's $4 billion a day coming into ETFs, and it blows the old record away. James, what do you make of that? Where is all this sort of money coming from and why?
Yeah, I mean, you're talking about $4 billion a day, but also if we're at $722 billion so far this year. The previous records from 2020, it's about $470 billion. The record before that is from 2017, $465. So we've taken a massive jump up we've blown through that $500 billion number for 2021. And it's all coming from, it's not just one thing. It's coming from a ton of different areas. ETFs themselves are pulling in tons of money. Investors are piling in at record rates, obviously. And it's coming from new things like Bitcoin ETFs, as we'll talk about a little bit later. It's coming from passive equity. And the trends, honestly, some of it's coming from passive index funds and moving to ETFs. But you can go into a little more detail there.
Yeah, I mean, I think some of the normally ETFs take in about $400 or $500 billion a year. The excess, I think, is coming from the bench players finally scoring. In Q1, we had value working, small caps, emerging markets, international. Tips has been a year. Anything with the inflation in your name has taken in a ton of flows. So you've had more breadth of areas working, and that's why I think you see extra flows this year. But that's my take on it. Now, speaking of, one of the reasons ETFs are doing so well is active. Whether it's something like ARK or themes or ESG, these are all active tilt kind of things. Active is really finding a home in the quote unquote ETF world, which a lot of people equate to being passive, but it really isn't. Talk about what you're seeing on the active front.
Yeah, so there's this new rule, they call it the ETF rule, that made what basically custom baskets easier. And what we've seen over the last 18 months, we've seen more active ETFs launch in the last 18 months than there were literally existed before that time period. So we're seeing this huge boom in active ETFs. Now, a lot of these are kind of active in name only. So they're following a rules-based investment strategy. Maybe they're tinkering with an active options position overlay, or they're just really just following a rules-based strategy with the ability to change things on their end via the creation redemption process. So there's a lot of issuers leaning towards there. There's these new ants which have come out, active, non-transparent, or semi-transparent, which honestly have been kind of a dud, except for a few different launches. So active has really taken over, but it's still, the real trend is still active to passive, high cost to low cost. We see in the public fund space, ETFs, mutual funds, right now it's about 45% passive, and that's growing at 2% a clip a year, and is largely dominated by the ETF space. Fixed income is still largely active. There's certain areas that are largely active, but if you look at the domestic equity fund space, so think S&P 500 funds, QQQ, they are 55%. The market in the US is 55% passive. So we're already over 50% in plenty of areas of investing.
And I would also add that I think the active passive thing, that terminology is sort of going to the back burner and fading away. What I have found is more, are you cheap or are you shiny? And we tend to see the flows go to dirt cheap, vanilla, like that's where 70% of the money goes. And then most of the rest goes to things that really sparkle and shine. That could be an ARK, a theme ETF, crypto. And it seems like that's the way portfolios are now being constructed. They're barbelling. And so it makes sense to me. And as you said, active, non-transparent, they're kind of in the middle. They're a little on the higher cost side, and they don't deviate much from the benchmark. That's a tough place to be. Now, speaking of shiny objects, let's talk crypto. The first Bitcoin ETF in the U.S. was launched 10 days ago, and it blew my mind how much it traded on the first couple days. Put into perspective how big of a hit this product was.
Yeah, so the largest launch we've ever seen as far as first day trading volume was, well, we'll call it organic trading volume. There's plenty of ETFs that launch with institutional seeding, but it was buzz. They launched with $470 million in first trading day. We thought maybe this thing could break it, but we did not think it would go to $1 billion, over $1 billion on the first day of trading. It's at $1.3 billion now. We had a second one launch from Valkyrie, who the CEO is coming up in a little bit to talk here. They're at $50 million. So it's been an absolute smashing success, and there's a lot of people lined up to launch it, but there's an issue with them. So why don't you go into why they haven't launched yet?
Yeah, it's a complicated thing. There's future commission merchants where they don't want to take on more Bitcoin on their balance sheet. Long story short, the market makers who work the futures markets are a little overwhelmed. We think they'll probably open up in the next couple of weeks, and you'll see VanEck and some others launch. But really, I also want to talk about, this was not a spot Bitcoin ETF, which is what most of the investing public wanted. Hester Peirce was on earlier saying that Gary Gensler really just wants ETFs that are tracking regulated markets. Well, that means futures. It's also under the 40 Act. But just talk a little bit about the long-term risk or I guess what you have to watch for when you buy a futures ETF.
Yeah, so a futures ETF, the way futures work is you own the front month contract. So the contract expires at the end of the month, and then you have to roll to the next month. The problem is the futures market is typically in contango, so the next month is more expensive. So you're constantly selling the lower price and buying the higher price under normal conditions. So that leads to a little bit of drag on the overlying portfolio return. So that can add up to 11% a year on average and go up to 40% even at times. But we think that market's going to mature, and those roll costs are going to come down over time.
So we think it'll be a trading product for now and maybe long-term later. And I will leave it there. Hopefully they'll approve spot ETFs in the next couple of years. We're hoping so. I'll just bid you farewell and say my name's Eric Balchunas, and you can find us on Twitter or on the terminal at BIETF. Thank you very much.
Hi, my name is Taylor Riggs. I'm a reporter here at Bloomberg TV. I am so excited to announce that Tim Gokey, of course, is joining me. He is the CEO of Broadridge, of course, the company that we really know about focusing on technology and some of the solutions as it relates to financial services company. Tim, thanks so much for joining us.
Taylor, thank you very much. Great to be here with you.
Great. Tim, it's so interesting as we think about coming out of a pandemic. So much has changed when it comes to the technology and the automation and some of the big technological changes when it comes to financial services. What are you seeing as some of the biggest trends that you noticed in the pandemic and now coming out?
Absolutely, Taylor. And it's interesting because I think we see that disruption always leads to innovation, and you can go all the way back to the 60s when the New York Stock Exchange couldn't clear all its trades, and they actually stopped working every Wednesday so that firms could catch up. And at that time, the number of shares traded was something like 4 or 5 million a day. It went up to 13 million a day, and everything stopped. And now it's billions because of the introduction of technology. So it's just interesting how things always, innovation leads. So, and the pandemic has been, a big disruption. Is one of many that are happening. And it is leading to really acceleration of some things that we were already seeing. And there's so many things going on, but there are two that I think are really interesting for your audience that I want to focus on. One is really the continued democratization of financial services. And the other is the continued digitization of financial services. And those are both creating real changes for capital markets firms, wealth managers, asset managers, others. And that all comes together in terms of how to address it. And the third trend that we can talk about more toward the end around mutualization. But those two are the really big ones that we see.
Well, and you're spot on. I think democratization might be the one where people's ears perk up because we're all in this sort of meme trading, no fee, sort of everyone's on your app, environment. What are you doing specifically to capitalize on that, but also make sure that there are protections in place? Because that's been a big concern as well.
Yeah, absolutely. And look, one of the things that I think is useful for us all to keep in mind is that democratization, it is a very current topic for all the reasons you said around memes and all of that. At the same time, it's been going on for 50 years. When you look at the move away from fixed commissions, the creation of discount brokerage, the creation of online brokerage, then the creation of 401ks, the growth of ETFs, the average fee for asset management has gone down 25% in the last 5 years alone. So, the free trading is the culmination of something that's been going on a long time. And there are things coming like direct indexing and the continued growth of managed accounts that will keep this trend going. So it is a very current trend, but it's one that has a lot of legs and has a lot of future. So with that as background, I can talk about some of the things we're doing, but I do think that's an interesting point for people to remember.
Yeah, please continue. What have you been noticing as some of just the demand this time around versus other things, and then specifically what your company is doing to capitalize on that?
Absolutely. One of the things you see with this is there's been a tremendous growth of positions in the stock market. So a position is if I hold one share of IBM or hold 100, that's one position. And we are sort of in a unique position. Part of what we do is we're really the infrastructure underlining corporate governance. And as a result, we connect every broker-dealer with every fund company, with every individual investor and public company. And we measure each year how many individual positions are there, because if you go to vote at a board of directors election, you need to know that. And that generally over the past 10 years, it's grown in sort of mid to high single digits. In the 12 months that ended in June, it grew 26%. And when you dive down into it, yes, there are things like GameStop and things like that, but it's much, much broader. It's big companies, small companies, all industries. It's the online brokers, but it's also the traditional brokers. So there's something really going on in terms of an additional level of participation in the market. And so there's that trend. And then there's this trend around more voting in the market and more transparency. There were two things that came out just in the SEC this morning in terms of making it easier for people to put forward proposals to companies around ESG. So ESG is a big thing here. There is also one around better reporting and transparency by asset managers in terms of how they're voting. So their people that invest in them know how they're voting. And when we talk about how we're addressing it, obviously we're scaling up to support all of that. We've been working with one of the largest asset managers, BlackRock, and they made an announcement just a couple of weeks ago to enable pass-through voting, where for their institutional shareholders, they will enable them to vote themselves if they so choose. And that is really meeting, it's sort of very interesting because it's where ESG meets innovation, meets sort of, all democratization. And I think that could be an interesting trend over time.
And I think you're right in that so much when we think about the democratization of finance, you're thinking, oh, well, everyone just has access to free trades online. But as you said, there's that sort of second derivative of that, the voting, the access to be able to go to some of these shareholder meetings on Zoom during the pandemic, to be able to be in that room, which traditionally would have been a lot harder. With those shareholder voting rights, what are some of the big changes that you've noticed about some of the proposals? You mentioned ESG and the way that some of this democratization has opened up some of those meetings.
Yeah, and on the meetings, you're right, Taylor. The move to bring all these meetings online has been another driver, and we've gone from just 2 years ago 300 meetings online to last year 2,400. It continues to grow. And as we see people, some people have asked, with the pandemic going away, will that go back? And, what we're hearing is, I'm never going back. And what we're seeing in the companies that we're working with, that they're renewing and continuing those plans. Most of the voting season is largely from January to June. This past voting season, 95,000 people participated in an online meeting around corporate governance. So that access, when it goes online, the participation goes up, quite a bit. Within that, the kinds of proposals we're seeing, and this is off of small numbers, but certainly, we all hear about the Exxon case and engine number 1, or 57, I guess, sorry. But it is, when you look at the stats, the number of proposals around ESG and climate are really significantly advancing. So that's going to be a topic, I think, for a lot of companies for a while.
And not going anywhere. As you said, it seems like that certainly is here to stay. We're almost about halfway through, Tim, and I wanted to pivot if we could. You mentioned, of course, this democratization of finance, but another big theme that you're really seeing here is sort of this digitization and how you're thinking about enhancing some of the efficiency, some of the sustainability. Can you give us a sense of sort of specific, digitization is a big word that we've talked about that's been around for a while. What specific things are you noticing, perhaps maybe this year, that's making firms a little bit more efficient when it comes to sort of integrating all those financial solutions?
Yeah, it's really, it has been going on for a long time. And it's one of the things that's being driven by democratization. And then in turn, it is driving democratization. And the pandemic has significantly accelerated it because people are adopting, some 75% of baby boomers said they've adopted new tools for interaction. So people are really becoming used to this, and every firm is really racing to change their business model, leverage next generation technology, and so it's a big trend. I think one of the very interesting things is how it all intersects with AI, and so AI is going to be on top of digitization. A great example is in capital markets is fixed income. So, a lot of trading is 90% electronic. If you look at trading of fixed income credit instruments, it's 30% because they're very complex, and the liquidity is much lower. So, in the future, you're going to see AI married to help people locate the right counterparties. We're building one such platform. I'm sure it won't be the only one, but using AI to locate the other counterparty, and then new trading protocols to allow demand to be aggregated is going to really increase liquidity in fixed income. That's one example. Blockchain, obviously, a lot of people talking about crypto on this event, and blockchain is another technology that's new. Cloud, there's some recent research with financial services CIOs in terms of what percent, not just using cloud, but where their main workloads would be on the cloud. And they're saying 60% of their workload will be on the cloud by 2026, which is, that's a big increase over just 5 years.
You know, cloud and AI sound good, but I have to say, when you say blockchain, everyone's ears perk up. So forgive me, because that's where we're going to go. We're going to talk about blockchain, because I think it makes an interesting point when you talk about fixed income, such an opaque market. The financial markets had traditionally, not really been as transparent as perhaps maybe people wanted. How is blockchain changing that? Where on the blockchain, I believe you can probably actually see a lot of these things in a much more transparent way. And then we have a question from the audience on crypto as well, which I'll get to after.
Yeah, I do think, and I know that there will be a lot of people as part of this conference who are interested in crypto and in DeFi and, and all those things. And I think it's useful to think about, sort of a spectrum relative to blockchain, because there's all the way out to crypto, where it's blockchain and it's a whole new instrument. But there's a sort of a more basic way to think about blockchain, which is, look, it's a new technology. It's a distributed database. It creates automatic reconciliations. You have multiple parties all having the same thing, and they know that it's in sync and that it can't be changed. And those characteristics give it the ability to solve, some interesting problems that whether you go to DeFi or crypto, they still solve some interesting problems. So a great example is the repo market, which I'm sure not, people don't spend, huge amounts of time thinking about the repo market, but we clear and settle $10 trillion every single day, mostly in the repo market as things roll over, because it's one-day financing, it all rolls over. And the ability to bring blockchain to the repo market to make that faster and easier is, it's a huge opportunity. We introduced a product 3 months ago. It already has $35 billion a day going through it. Just helping people do trades between their own entities, from one entity in the same bank to a different entity. Right now that goes out to market, gets cleared, comes back. You can do it internally using blockchain, and it's a really nifty application.
On that theme, Tim, it's interesting. We are getting a question from the audience, if you will humor us, asking, where do you see crypto market-based ETFs in the future? Because we've talked a lot about the Bitcoin futures ETFs that we've gotten, but not yet ETFs with the underlying Bitcoin. And then people saying that you have to crawl before you walk. So this is sort of a step in the right direction. Do you see some bigger sort of ETFs as we talk about this digitization and then this democratization that ETFs have been able to provide?
Yeah, I think it's a really interesting question. It's not one that I have unique knowledge on. I think, though, the challenge has been, if for a retail investor that wants to trade Bitcoin or have exposure to that asset class, because it is really growing as an asset class, and all the big wealth managers are creating options for how to participate in it as an asset class. And so when you think about it as an asset class, how do you make it easy? How do you make it widely accessible? Today, it's largely through a separate infrastructure. And then there's real questions about where is it custodied? There have been exchanges that have just gone zap in the night. So if people had the ability to know that there was a very trusted custodian behind it, and there is an easy way to trade and participate going through today's infrastructure, that would really open the gate for retail investors to participate. And in addition, there's a whole disclosure regime that goes with ETFs, just like funds, that allows investors to know what's the cost, what's the risk, what's the return. And that transparency is so important to protect investors. And this is just an example of when you take just the disclosure that already exists for a fund and ETF industry and now apply that to these crypto instruments, it's a real protection for investors.
Tim, we're coming up on about 5 minutes left. I know that there was a third sort of theme we wanted to hit on, but quickly, you did say something here about settlement and the blockchain. And I'm wondering if you can give us a comment on some of the real-time settlement issues that we've been seeing. It was T+2, then T+1, and do you see a time when we could get to some of the real-time settlements? And is blockchain the sort of way that you think that could happen, or are we just years away from that given the complications?
I personally believe in the industry is right now. We were at T+5 for a long, T+3 for a long time. We moved to T+2 just a few years ago. There's a big conversation right now around moving to T+1 and the belief that that could happen within a couple of years. And the current industry infrastructure with tweaks can get to T+1, and that will get a significant amount of the benefit that people are looking for in terms of reducing the amount of collateral and things like that, taking risk out of the system. Getting to T+0 is, more than a technology challenge. There's trading in Asia, there's securities lending. There are a lot of complexities inside the system that is not just technology you need to fix. It's the reality of physical separation and time zones. So I do think that will be more challenging. Blockchain is a potential solution. There are other solutions as well, but we would need to solve some of these other wrinkles.
In the few minutes that we have left, there was a third point that you mentioned, this sort of mutualization. And I'm wondering if it's hitting on this theme of where you can bring all these financial solution technologies together to simplify your life, and where companies are coming to you and saying, you know what, maybe a third party is better at doing this, and sort of divesting in that way. What are you seeing around there?
Yeah, I think what we're seeing is that people are making, first of all, they have a, you look at bringing next generation technology and digitization to their whole technology estate. They have so many things going on that, it's a big task. And so if they are able to leverage an industry solution for part of that, for some of the things that need to be done right, but maybe are less unique to them. So if they can, and you're seeing smart decisions around taking, significant chunks and putting it someplace else where they can share the investment, they can share the change, they can share the regulatory burden, and share all of that so that they can focus their energies on the few things that really make them different from their competitors. And that I think when you look back at the pandemic and the outcome of all of that, that this rise in mutualization that we're seeing will be one of the big takeaways that we have from it, because it's a real, those industry solutions. Obviously, we do that, but others do too, and it's a real way to accelerate a lot of the technology and business model transformation that needs to take place.
I want to make sure that I give you the last word here. Is there anything that I haven't asked you that you're noticing? Any sort of final thoughts you want to make sure that we get in here? As I know we've touched on a lot of these three themes and digressed into crypto a little bit, but is there anything else that we may have missed?
Taylor, it's been great. I think just coming back to this whole theme of these are long-term trends. They've been with us for a while. They're going to be with us for a while. So as people think about it, don't think about the news headline of the moment. Think about what that means 5 years from now and how to position yourself for that future.
What do you see as the biggest risk going forward as you think about the business and the climate?
I think for most firms, there's what's the risk that's out there. But for firms, I think the risk is not doing enough to be ahead of the things that you can see coming. And it's very easy to say, well, in the time that I'm going to be in my job, will that be long enough? Maybe that won't get here, and not taking the actions to put their firm on the front foot to benefit from those trends, rather than just sort of holding on to get to the next job.
Tim Gokey, such a pleasure to have you here. Of course, we know you as the CEO of Broadridge. I think sort of a great recap of getting into crypto, but also talking about some of those big themes that we've been talking about, the democratization, the digitization, you name it. Really, really appreciate your time. Thank you so much for joining us.
Taylor, thank you.
Well, hello, everyone. I'm Mike McGlone with Bloomberg Intelligence. Excited to be contributing to this event. It's been a great listening, educational thing, and I'm happy to introduce my panel. We'll focus on Bitcoin as the name of the panel, but I don't necessarily know we'll actually focus on Bitcoin the whole time. I spot we will. And with that, you show the chart of Bitcoin, which is clearly moving from the upper left to the lower right. It's the annual chart. But my guests are Ria Butoria of Castle Island Ventures, Marcus Swanepoel co-founder of Luna, and David Ripley of Kraken. So I'm going to crack right into it and start with Ria. And Ria, my first thought is I want to do like a simple little intro of each person, and then we'll get into the discussion. What brought you from that bastion of wealth management in what Tom Keene calls the People's Republic of Massachusetts of Fidelity, to Castle Island Adventures, where you're just in the pulse of allocating money into, or I would say capital, into this cryptocurrency digital asset space? What brought you there, and what do you see? I think you need to unmute yourself, Ria.
Sorry about that. Great to be here. Thank you so much for having me. So I, prior to joining Castle Island, my entire career was in research in some capacity. So I started off as an equity research analyst covering fintech and payments. While I was in that role, I kind of fell down the crypto rabbit hole and realized that I needed to be doing this full time, because at one point I was spending every waking moment not working on my actual day job, just researching crypto. And really enjoyed my time doing research. And I feel like that's an incredible role to have, because you're essentially getting paid to learn and research. And eventually I got to a point where I wanted to apply that skill set, in a way, put my money where my mouth is, and actually start deploying capital into the space. And you know, I've looked up to the Castle Island team, the franchise they've built for a number of years, pretty much since I joined the space back in 2017, 2018. So when the opportunity came up to join the team, I jumped at it.
But I like what you mentioned about put your money. I remember when my first day of the Board of Trade, it was a sign. This is in Chicago. This is in the 80s. It said, "The ultimate seduction of other people's money." And I suspect you're involved with some of that too. Marcus, I want to go to you next. I love the headline of Luna, your company. It says, "We're upgrading the world to a better financial system." I want to get your feeling for that, just a quick outline, and your feeling for what I heard recently from the head of JP Morgan, Jamie Dimon, when he said he didn't care about cryptos. I thought, wow, there's a lot of people in the world who don't have anywhere near the privileges of the people in this room have, are just gaining a better life through it. So tell me a little bit about yourself and about Luna and what that might mean here, and maybe your thoughts on what Mr. Dimon said.
Yeah, I think, look, unfortunately, a lot of the narrative around crypto, certainly over the last 2 or 3 years, has been around investing and in some cases speculation and even gambling, right? That's been tied into the movement a little bit. And I think when a lot of people say it's worthless or it's not going anywhere, those are the things that they remember and the things that they react to. But certainly in my case, having been brought up in Africa, spending most of my career working across Africa and Southeast Asia, one of the things that initially attracted me to crypto, and similar to Ria, I come from a finance background, and I'd worked in retail banking and investment banking, all types of financial services. And it was looking at all these real problems that people were facing across all of these markets, and then looking at this technology and going, look, there's something about this being able to move value across the internet really easily that has a lot of potential to address a lot of these problems. I think where people get a bit stuck is everyone's saying, oh, but why can't it address all of those problems on Monday? And as we all know, these things don't happen overnight. So if you take a 10 to 20 year view on the industry, and you're willing to not just look into the speculative / investment use cases, then the story becomes quite clear to a lot of people. And I think maybe someone like Mr. Dimon doesn't unfortunately have the time and the luxury to kind of reflect on a lot of these things. But yeah, that's our view and how I basically got there.
So David, we're going to you. I look at Kraken as an ex-trader. It's like, oh man. That's so the things I see on you, and I don't trade, I can't anymore, but the things I see where I can do physical and hedge out of the money options and taking income and stuff. And I see Kraken as the center of, for someone like me who loves to try to find big in markets, is a cool place to be. But you didn't start there. You started at Gildera. Can you give us a little of the lay of the land, why you're there and what kind of things you're mainly focused on?
Yeah, sure. Again, thanks for having me, Mike. So, yeah, my path to crypto probably probably resonates or similar to a lot of folks in the space. And so I certainly had my rabbit hole moment, or actually probably a half-year period of going down the rabbit hole, where I too was a part-time researcher of the space and just absorbed and dove into everything possible. This was in 2013, and so I learned of Bitcoin around that time frame. And from an individual who came to be my co-founder, at the time in 2013, there weren't too many things you could do in crypto or in Bitcoin other than found a company. There weren't companies you could go join and do all these types of things. So that was my path. Again, similar to Marcus, and founded a company, Glidera, which was a little bit of a twist on exchange. We basically enabled all of the different Bitcoin and crypto wallets at the time, a mechanism to add buying and selling into their apps. We ran that company, grew it. Kraken happened to be one of our partners in the space, and it was in 2016, after a number of conversations with Jesse, the founder of Kraken, we decided to move forward with the acquisition. And so Glidera, my company, was actually acquired by Kraken, and that was the path that I took to join Kraken. And then, I joined as COO. It's certainly a drastically different company than when I joined. We were probably maybe not quite 100 people at the time, and we're pushing maybe close to 2,500 now. So it's definitely a different company. It's been an exciting 5 years.
Okay, what's good backgrounds, everyone? Thank you. I want to circle back to Ria, and Ria, the thing I think I'd love to get out of you is, I'm sure you can't dig into specific, is where you're seeing opportunities and where you're allocating capital. I sense that per pre-discussion, you're looking at other countries' developing markets. Tell us a little bit about what you're seeing and what you expect in this space per evolution in the next 2022?
Yeah, definitely. So, as you mentioned, one area that we're really excited about is companies that have expertise in local developing markets, like Luno, for example. Yellow Card is another example. Pintu is another example, that are building infrastructure that is for the most part built out in developing markets, but catering it to developing markets such as Africa, South Asia, South America. And, that's something that we're really excited about, because I think the value of something like Bitcoin and digital assets more broadly is unique in these markets that are facing hardships in the form of inflation, currency devaluation, capital controls. There's a large amount of remittances flowing in and out of these countries, and they make up a significant portion of their relative GDP. So to the extent that crypto assets are able to kind of alleviate or provide optionality to citizens in these regions, that's really exciting to us, and we're excited about companies that are building infrastructure that facilitates that. I think Chainalysis actually recently published their Geography of Cryptocurrency report, and what they measure is not aggregate transaction volume across different markets, but grassroots adoption across different markets. And then they construct an index based on on-chain transaction value, and then P2P trading, and adjust it based on purchasing power parity per capita. And if you look at the list of the top 20 countries in that index, they all are mostly within Africa, South Asia, and South America. So this is definitely something that we're really excited about at Castle Island.
Thank you, Marcus. You want to piggyback on that a little bit? To me, the key thing that I think it's not widely known in this country amongst our leaders is the S part of ESG and cryptos. And I just hear about it, but I see it, and I see it from colleagues. Like I have a colleague from Zimbabwe. He say he loves Bitcoin. I wonder why. Talk to me a little bit about what you're seeing and what you're doing, what you're to make this, and also a little bit like we mentioned earlier. You're seeing some part of to me, represent part of this major fund of flows of capital coming into your space. Yes,
for sure. I mean, look, we when we have on the ground operations in most of these markets, Nigeria, South Africa, Malaysia, Indonesia, so we get a lot of data on what people are doing and what they're using things for. I think that there's definitely some really encouraging signs around adoption. Certainly we can see in our demographics and in our data that people are very quickly shifting from purely speculation and trading into more like treating it as like an asset and thinking of it as a long-term investment. We are seeing demographics shift to lower age groups very quickly. So interestingly, a couple of years ago, it was mostly people in their 30s and 40s that could afford to buy crypto that were buying it. And now it's, shifting to people in their early 20s. So that's happening. We, of course, do see people using it for transactions. It's still in the minority. I think that's also partly because, Bitcoin, because it appreciates so much so quickly, people tend to hold on to it. So I think with the introduction of stable coins and certain other things that are being built around on top of Ethereum and a few other interesting technologies, we'll see that start picking up as well. So we are seeing the first signs of it moving, away from this early speculation to asset class and then into transacting. Having said that, a lot of the users at the moment are still relatively the same type of people that you would get in developed markets. They live in cities, they have disposable income, they often speak English, or they're well educated. But like I said, the tipping point is starting to tip towards those other kind of use cases. So again, it's happening a little bit slower than what most crypto people wanted to happen, but also a lot faster than what most people outside of the crypto world actually believe it to be.
Dave, I want to transition to you. In a sense I get from what Kraken's doing and is what you're doing with the accessibility to the space and the efficiency you're helping provide. And I want to rope in a little bit with these exchange-traded ETFs, potentially the futures competing with what you provide on your platform. Tell us a little bit about where you think that's going and what Kraken's doing in the space, if you could.
Yeah, absolutely. So Kraken as a business, we, obviously we started as, a pure spot exchange, and we've absolutely built on and added a number of new products and features beyond that. I do think you're absolutely right. One of the things that we bring to the space is accessibility, a way for individuals, businesses, funds to get into crypto. Obtain crypto, buy crypto. I think, the business is largely in, the majority of our business actually comes from Europe. The U.S. is, U.S. North America is our next biggest market, and that's a big chunk of the business. So we do, lean towards, I guess, the developed markets. But one interesting thing that is actually a meaningful part of our business is partnering with a number of those businesses in the developing countries. They get their liquidity from Kraken in many instances. And so, that is much more, possible with crypto, right? That, these two exchanges, one in a developed country like Kraken, and then another in, a developing part of the world, Latin America, Africa, and what have you, actually partner in that way. And so I think that's, another, interesting way that we indirectly support a lot of the developing market growth. And frankly, that's our mission, without a doubt, is to grow crypto globally, because we really see it as the best way out there to achieve this goal of financial inclusion.
What trips you up? What are you worried about? I want to transition to regulation and stablecoins, but since you mentioned it, what are you worried about?
Yeah, so it's interesting for Kraken. There are the most classic things that that are out there, right? I'd go for the first one is security, actually, right? It's we sit on about 40 billion in assets right now. Most of it's crypto, small fraction of it is fiat, that's a significant responsibility. We invest an enormous amount in security. Our security team's pushing 100 team members right now. And so that's really a meaningful part of the business. And I would say, number one on the list. We think of all the risks, it's the one that we've invested the most heavily against, and the one that we're, have the most kind of control over, which is great. I mean, I think, regulatory is an interesting one. Yeah, it's out there. I think we see regulators in the U.S., in Europe, in all the parts across the world. We're licensed in a bunch of different geographies and registered, taking different steps with regulation. I think, one of the things that, becomes much more interesting, not just crypto, but, even the internet generally is, we're starting to see competition among regulators and governments in a way that, we didn't see many years ago. And that's one thing that, crypto, I think, is enabling. And so, as different regulators and governments kind of jockey for position in the global economy, I think it kind of sets up for, a beneficial dynamic and the right dynamic, for governments and regulators to ideally support innovation in technologies like crypto.
Ria, I want to transition to similar question, similar topic, and I'm happy to go wherever you want. To me, the key thing about next year is going to be regulation. I think it's going to focus mostly on crypto dollars, which to me is just it's an evolution that's going to compete clearly with euro dollars. And here you show that massive increase in crypto dollars. People talk about Tether, and I'm like, yeah, Tether's just one. There's a dozen of them. What do you see for risks? And my sense is what I'm seeing organically, most notably in non-U.S. countries, people wanting to get access to the buck. I mean, they're not going to yuan. You probably see that in your focus. But what do you see as potentially where that's going? And the quote I heard earlier, I think Michael Saylor says it's either going to zero or it's going for 120 billion to add a couple zeros in the next few years. Give me your outlook. What do you think? And the key thing I want to get out of all of us is potential for regulation, potential for U.S. to mess up, which I think is unlikely, and the bumps in the road we should investors expect next year, which of course was kind of a tough question.
Yeah, I mean,
yeah, I'm happy to.
Yeah, I'm sorry. I meant for Allie. I'm sorry for Ria on that one. I meant for Ria. But go, David, if you have one thought, why don't you finish that, and then Ria will go to you.
Yeah, I mean, just real quick, I absolutely agree, Mike. Regulation is going to increase. It's going to increase. I mean, I do think there's ideally a way to do it the right way, and a way to do it the wrong way for crypto. And so we absolutely see it across the board.
Ria,
yeah, I agree. I definitely agree with David. I think, one thing that's significantly different about the industry now versus maybe a few years ago is the amount of dialogue that crypto companies are having with regulators. The fact that, institutions like Kraken, Avanti are actually already being regulated as banks or have divisions that are regulated as banks. And then you have, institutions like Coinbase, which went public and have the capital to, lobby and vocalize, what this industry needs. And I think that you are seeing more and more regulators in the U.S., outside of the U.S., understand that there is a right and a wrong way to regulate this industry. And I think that regulators are putting in the work to understand what is the right way of regulating this industry. It definitely won't, not everybody will be converted overnight, but to see the forces growing every single day in and out of the industry and just, with the rise in value of the industry as a whole, having the capital to deploy to have conversations with regulators and teach them about the right way to regulate this industry is really exciting. So I think, regulation, the right type of regulation is good and provides certainty and clarity for businesses that are operating in this industry. It's just making sure that that right regulation is implemented.
Marcus, I feel you're at the tip of that evolution, and once this is properly regulated, I think we're going to look back at this from the future, and you're in a key place to make the world a better place by helping lift people out of poverty, and that's what I'm seeing. But your thoughts on that concept and kind of my optimistic view for what you're doing in the space. And it's good to make money too.
No, look, I mean, I think regulation, we all agree it's important. It's something that we're going to, we all want to happen. I mean, we've been working closely with most of these regulators around the world for about 7 or 8 years now. So we know what they think. I might have a slightly different view here in the sense that generally speaking, we found that regulators have been really pragmatic about it. They could have banned it. Most regulators, they didn't. They're still trying to come to grips with it a little bit. The people who've really been de facto regulating the industry over the last few years has been the banks, because it's most crypto companies need some bank account to be able to operate. You could say, well, now a lot of companies that do NFTs and DeFi don't need it. Well, they do still need it because they need the on-ramps. They need people to come to us or Kraken to buy the crypto to then send to use those things. And so the banks have put a lot of criteria in place saying you need to do X, Y, Z in the absence of regulation, if you're lucky enough to even get a bank to do that. And the banks obviously have very different incentives. They are very risk averse. You've seen a lot of fines and that they've had over the last few years. And unfortunately, that risk hasn't really gone away. So even though, of course, regulation is important, we're going to see that increase a lot. I would say there's still this overhang of banks making their own decisions. We've had countries where there is full regulation in place and we have regulated legal entities, and the banks are still too scared to move into this space because of whether it's reputational risk or they just don't have the resources to manage this risk. So I think that's gonna the bank's gonna play a key be a key player in this. And if I had to maybe just say one more thing about what keeps me up at night, which is related to this, but the level of misinformation and low level of education around crypto is absolutely astounding still, right? So for a lot of people who've kind of gone down the rabbit hole, you just think everyone gets it now, come on, how hard can it be, and so on. But how that manifests itself in real life is not just with consumers and getting more people to use it, but all you need is one person on a bank's risk committee or at a regulator, on a committee that needs to make a decision, that read some article about Bitcoin mining being bad for the environment, or they saw some Facebook post about money laundering and crypto, which was just clickbait. And that thing takes such a strong emotional hold inside that discussion that you have these institutions that are actually relatively neutral / pro Bitcoin or crypto, but then you have some individuals that are so emotionally, against it and often based on quite ill-informed data points. And that friction makes it very hard for everyone to move forward. So I think just education and a basic level of education for everyone around, everything, the reality, the pros and the cons of it. I think that's incredibly important. And sometimes I feel the industry, we've moved along a little bit too quickly, just assuming that everyone's on the same page. And definitely most people are not.
Well,
I just want to piggyback.
Go ahead, man. Sure.
Yeah, I just want to piggyback off of what Marcus is saying. I think that's such an important point, and that applies to regulators. It applies to financial institutions that are banking this industry, and it also applies all the way down to boots on the ground, especially in developing markets, individuals that don't have access to the same level of education, information that we do in developing markets about this space. And, as a part of our deep dive into Africa, as we were, evaluating the yellow card opportunity, we did interviews with different employees in countries like Ghana, Uganda, South Africa, Kenya, and we found that the biggest risk that they face is individuals that they're hoping to onboard as users that have been burned in some kind of scam, Ponzi scheme that completely taints their whole view of all crypto assets. So I think that is the lack of education applies, all the way from the top to the bottom as a big risk that we need to address.
So awesome. Thank you for that. We have 3 minutes left. I think, Ria, I might have to leave that with your last remarks. I have a little bit of time for Dave and Marcus. Again, I want to split completely the Bitcoin. What I saw happen, we all saw happen with this recent launch in ETF. I look at that as that's a massive opening up of the cash and carry trade where, the futures restrictions where it's only 3-to-1 leverage. I'm used to 21. I'm from futures. Are going to open up and the world's going to say, hey, I can get almost free collateral, holding Bitcoin, selling them on a futures and hedging it in a hedge fund 5-to-1. That's with that question. That's what I see happening. Marcus, let's go to you on that thought. And where do you think we're going with that?
Look, I mean, it opens, any instrument like that opens itself up to all kinds of layering on top of that. So I think, without going too much into the specifics, I think it's setting it's building like a platform for additional innovation to happen on top of it. I would argue that a lot of the innovation is probably going to just mimic existing financial markets, and it's not necessarily going to make a big difference at the crypto layer. But what it does do is it increases adoption. It probably is going to have a positive effect on the price. And the more people that get involved in it one way or another, the better. So I think there's, these feedback loops are going to, indirectly lead to more adoption and more people using it. I hope. So I think it's very positive.
Dave, we've got 2 minutes. It's all yours.
Yeah. Yeah, I agree with Marcus. This is, it's an initial step for a lot of individuals to get into the space, and it's that much lower of a barrier for many individuals to go and purchase an ETF from their brokerage account. So I do think there's like a meaningful, retail play in addition to. One of the groups of customers that we serve quite substantially are more kind of like active traders, prosumers, that group who will absolutely engage in some of the trades that you mentioned, Mike. Looking to find an arbitrage against the futures versus versus the spot markets, as well. And so I think, while it's, we can say it's, not the same as like actually, purchasing Bitcoin, downloading it to your own, hardware wallet, holding your own keys, all of those various different types of things, it's still a step in the right direction. To the extent that people have exposure to crypto, they, move down that path of gaining more education in the space. These are all positive things. And, the second step for them, or the third step or fourth step could very well be to actually, own Bitcoin and then potentially Ethereum, hold their own keys, and all those things could certainly come in line following that first step.
Well, your timing is perfect. I just love what's happening in this world right now, where it's been completely banned in China, and these bastions of capitalism in Europe and Canada and US are launching futures and ETFs and saying, okay, well, fine, you ban it. We'll just adopt the new technology, and good luck with that one. So I'm just curious how it's going to all work out. But I see this digital Cold War developing, and you're right in the center of it, and it's going the right way. With that, we've got exactly 6 seconds left, so we nailed it. Appreciate your contributions, really appreciate your comments, and we pass it back to the moderator. Thank you.
Hi, my name is Jean-Marie Mognetti, and I'm the CEO and co-founder of CoinShares, European crypto leaders since 2014. Thank you for joining us for this new Bloomberg Financial Innovation Summit, and it is our pleasure to partner this year with Bloomberg to bring this fantastic event live. Today's CoinShare is European leader. My team and I are building CoinShare into a global leader. In other words, building an exciting company inside what will be, without a doubt, a $100 trillion industry. So let me try to share with you a few insights about the future of this industry and cryptos. Crypto is maturing. A few data. Crypto market cap is about $2.6 trillion, so up 2x year to date. Bitcoin dominance is falling 40%, indicating a growing diversification of the tokenized asset base. And finally, daily transaction and public blockchain are in excess of 130 billion a day. Crypto equity is impacting capital market. CoinShare research is very active on that topic, and I invite you to consult our index, the CoinShare Blockchain Index. Crypto equity is about 100 listed companies. Let's call them pure play crypto. They are miners, exchanges, and other fintech companies like CoinShares. Only 25% went for a traditional listing. The rest use routes like SPAC or RTOs. In the SPAC world alone, 32 billion SPAC capital was allocated in H1 2021 to cryptos company. While there is diversification in terms of geography, with companies scattered all over the world, the North American market is dominating and ruling without competition in terms of valuation. This is not a new thing, let's be honest. As such, crypto is entering the political arena by virtue of demography. In the UK alone, 4.4% of the adult population own Bitcoin, whilst 22% of the adult population in the US own Bitcoin. That's overall 300 million of the world population owning Bitcoin. Consequently, crypto policies are becoming important for voters. and new mayor Eric Adams in New York City is pro-crypto. Mayor Francis Suarez from Miami is also pro-crypto. At CoinShare, to be able to draw a business roadmap, we build a framework for this ecosystem, which is our vision of the sectors and articulate around what we call the 3Ds. So the 3Ds are as follows: digitization, driverless banking, and distribution. Digitization is all the assets will have a digital form, transcending borders and networks. Driverless banking refers to on-chain financial services, which are coming, and people want to harness the power created by their individual wealth and data. And finally, distribution. This is turbocharging distribution capacity to end user, directly bypassing layers of intermediaries and reaching billions of people, an exponential impact on your total addressable market. As such, the new finance stack is changing and moving away from transforming finance at the margin narrative. We are now surrounded by bold entrepreneurs, extremely well-funded, willing to attack the problem at its core, which will ultimately transform pretty much every company which matter into a financial service company. You can see signs of that with the FANG, all dabbling one way or another in payment and saving. And ultimately, blockchain network will power them. You can see that happening in fintech with Square, Stripe, or Robinhood, in social finance with Alibaba, Tencent, or Meta, and even in open finance with companies like Coinbase, Binance, and blockchain.com. But the key difference with what people, including regulators, are used to is that blockchain technology is really fixing what's flying and not wait for everyone to be happy to release a new feature. DeFi and NFT is a perfect example. After the CryptoKitties experience in 2017, which are collectible tokens which broke the Ethereum network at the time, we are seeing in 2021 the emergence of NFTs, or non-fungible token, which is using the collectible market as a business application, and as such, positioning itself as the currency of culture. A few data points on that to conclude, to give you some order of magnitude of what we're talking about. So top NFT collections are worth billions. In October alone, $2 billion worth of NFT changed hands on OpenSea platform. This is a very healthy business for OpenSea, but also for original artists who was clipping 5% in secondary sales versus 0 for traditional model. Christie's and Sotheby's are venturing now in NFT auction, and businesses like Sorare are attracting very healthy valuation. So in a nutshell, and to conclude this quick introduction, we are at the dawn of a brave new world where the codes of the past are staying in the past and something new and unapologetic is coming to transform, if not remove, old and well-established arrangements.
Welcome back to the Bloomberg Financial Innovation Summit. I'm Quick Take anchor Katie Greifeld, and I'm joined now by Leah Wald. She is the CEO of Valkyrie Investments, which became one of only 2 issuers to launch a U.S. futures Bitcoin fund in the U.S. last month. And Leah, I'm so thrilled to have you here. Let's talk a little bit about what it took to get to this point, because if we look at the fullness of time, the first Bitcoin ETF application for the U.S. was filed in 2013 by none other than Cameron and Tyler Winklevoss. The first ones didn't launch until October 2021. And I was hoping you could walk us through both the industry effort to get here and Valkyrie's own efforts to launch your ETF.
Sure. And Katie, thank you so much for having me. So it's definitely been a journey, both for us and for all other issuers and other participants in the industry. We originally filed for a Bitcoin spot ETF because that is the industry's goal, right? A holy grail of sorts. And, you know, we are, of course, hoping for a positive outcome there. That was back in January 22nd. That said, public comments from Commissioner Gensler in the time after that initial filing showed that he was much more willing to consider an ETF holding Bitcoin futures. And likely that's because they were already regulated and traded on the CME, you know, a regulated exchange here in the US. So We then filed for a 33 Act Bitcoin futures ETF. We then, given the comments made by Commissioner Gensler, decided to file for a 40 Act structure. Again, taking that regulated product, putting it into a regulated wrapper, which met far less resistance and had a productive collaborative discussions with the agency and led to the eventual trading of the Valkyrie Bitcoin Strategy ETF, which was exciting. So I think all of us in the industry, we are trying to work together towards that goal of hopefully one day having a spot Bitcoin ETF approved. We look forward to continuing to work with the agency to help alleviate any concerns they may have and appreciate that opportunity to continue this ongoing dialogue. But for sure, you're right. You know, we've all been at it for quite a while, and it's exciting to see at least the two ETFs being traded at least now.
And Leah, I want to dial in on your Holy Grail comment, because I've heard different people express that in a few different ways over the past several months at this point. What about a spot ETF that would physically hold Bitcoin? Why is that the Holy Grail versus tracking futures, which is the structure that is allowed to trade now?
Yeah, a lot of participants, both in the crypto ecosystem and traditional finance, do see the spot Bitcoin ETF as that holy grail, as mentioned. That's because it would hold the physical Bitcoin. You've seen these products in other countries. They've been approved from, ETPs in Europe to Canada, South America, in a lot of different places. There are, pros and cons to the futures ETF. There's pros and cons to the various structures and wrappers of 33 Act versus 40 Act. So I think that generally speaking, the main excitement around that is, again, rather than holding futures, you would have a product that does hold that underlying coin. And that's much more exciting for people in the ecosystem as it's more closely related.
I know it's very difficult to read the SEC tea leaves, but when is your best guess on when we actually could see a spot ETF start trading?
Yeah, it's definitely hard to read the tea leaves, although I think all of us are trying, right? Luckily, I think that the commission is doing a great job of giving out various guidance when they're feeling comfortable. I think that we're likely not going to see one this year. I think it's likely going to be somewhere next year. But, at least in the interim, we do have, two great opportunities and two products. So we'll keep trying to work with the commission, and I think the rest of the issuers will as well to hopefully get to that time where it's traded.
Well, Leah, you and me both, we're both trying to read the tea leaves. Me as a journalist, you obviously as an issuer. I am curious. I mean, I've heard a lot of the drawbacks for the futures ETF. There seems to be a lot of excitement about the prospect of a physically backed fund. But talking about the spot ETF in particular, I mean, what does the pro and con list look like there? Ken, heard a lot of pros, haven't heard many cons.
I think that's a good question. Again, the robustness of the U.S. market does make for an interesting environment for that type of product, which is expected to have a whole lot of demand. I think that there's some elements of the industry and the ecosystem specifically based to the plumbing that goes into an ETF that is still being worked on, whether it's custody to security to all the other elements involved with a successful ETF holding those coins. Obviously, there's great precedent for precious metals and others of doing a similar type of ETF that's holding something, we can call it physical, although of course it's Bitcoin, right? So I think that there's no real cons, but I think that we're all in the industry trying to get to a place where we can ensure that, it would be a very successful, comfortable, healthy market when these spot Bitcoin ETFs do come out.
And Leah, something I've wondered about in the past few months, really the past year, is how as an issuer you prepare yourself for, any signal from the SEC. Because if we think back on 2021, SEC Chair Gary Gensler came in, there was a lot of optimism that he would be more crypto friendly than some of his predecessors. Then it feels like the mood music changed, and for a few months, everyone just assumed that 2021, it's not going to be the year. We're not actually going to get the ETF. And then in August, suddenly it was game time. Gensler signaled that he would be open to a futures-backed product. I mean, in that scenario, do you just have people working around the clock ready to, go once he says go?
Well, I think you're right. Our team could probably sleep a little bit more. I think that that's definitely the case. I think you did nail a couple points there, which is one, a lot of it is just, preparation in anticipation of what guidance may come out. Having the 33 Act futures already in, confidentially filed for us, made it easier to be able to adjust for a 40 Act. My brilliant co-founder and our CIO, Stephen McClurg, had that foresight. So I think that, yes, it's, listening to every single comment and, hopefully having healthy discussions, but also having the preparations ready to be able to drop a filing or answer comments in a very timely manner when those comments come out.
Well, clearly Valkyrie is well prepared, because just in the past week or so, you guys have dropped a lot of filings, and we are in regulatory limbo right now, don't have the spot ETF, but even still, you filed for a leveraged Bitcoin futures product. I know you guys had to withdraw that at the request of the SEC. You also filed for a Bitcoin miners ETF this morning, and you refiled for the Valkyrie Innovative Balance Sheet ETF. I mean, what is your ambition for Valkyrie as an ETF issuer when you think about the next 5-10 years?
Yeah, great question, especially 5 to 10. And I think a lot of that does come from our conversations with both larger pools of wealth, from sovereign wealth funds to financial advisors, and just trying to learn, what they would like. Not all companies are comfortable with a spot Bitcoin ETF. Not all companies are comfortable putting on platforms a Bitcoin futures ETF, and some want crypto exposure, or crypto adjacent exposure. So to your point, to your main question, our currently trading ETF is really one in the series of planned ETFs for both crypto exposure and also crypto adjacent exposure. As you mentioned, those two are equities. So we do have a lot of great ideas, especially, again, our brilliant CIO, who can be a mad scientist back there in the product room. But, we do hope to bring this to the market in the near future and early next year. We hope that we can keep working with the regulators to make it happen. But I guess just to wrap that up, there's definitely interesting things to learn from talking to a wide audience of people, not just retail, not just institutional investing crowd, but all forms of investors, into what they really want to buy and why. And I think that there's a lot of room to play and a lot of different ETFs to address those different desires.
And Leah, we've talked a lot about Bitcoin, obviously world's largest cryptocurrency. You just launched a Bitcoin fund, but what about some of the other coins out there? When I think of Ethereum or Solana or some of the other altcoins, do you have any ambitions to put those into an ETF wrapper?
Yeah, we do have a couple private placement cryptocurrency grantor trusts for a variety of cryptocurrencies, with large ambition plans on those different trusts as well, and other private funds. We would love to engage with those coins and the regulators in the future to try to create, again, more interesting traded vehicles. But I think right now it's just working with the commission to try to get them to a comfort level with that spot Bitcoin ETF. So I think as we learn from the commission where their comfort lies, hopefully, again, that mad scientist will get to work on other coins and see what makes sense.
And Leah, I'm going to put you on the spot again. Obviously, you engage with the regulators a lot. What comes first, the spot Bitcoin ETF or an Ether futures ETF?
I don't know on that front. I think I may have to pass just because of the filings that we have in. But I think that we will soon, I think that we'll know. I think that the regulators have been pretty explicit and helpful on their comments and guidance. So I think that we'll know, and it won't be a big surprise.
Okay, well, I'm going to follow up with you on that one, but fair enough. Somehow we're already halfway through our discussion, and we've talked a lot about ETFs, but I want to talk about you specifically because you have a very interesting resume. You haven't always been in crypto. Walk me through life before crypto and how you made the leap.
Okay, BC, before crypto, got it. Yeah, so I did thank you. And so I did start my career at the World Bank, specifically in the Sub-Saharan Africa region for the former VP, Obiazek Wesley, really one of my greatest mentors. So at that time, what was interesting during 2009, 2010, the World Bank was heavily involved in building M-Pesa in Kenya, especially in the Sub-Saharan Africa region. And that was an SMS-based system for micropayments, so especially focused on underserved rural areas. Very successful. And that really threw me down the rabbit hole of microfinance, micropayment systems for underserved areas. So you're right. I did work in a bunch of developing countries, from El Salvador to Gujarat, India, with the Self-Employed Women's Association. So that they also utilize an SMS-based pictorial, actually, microfinance and lending system with their Sewa Bank for rural villagers. So, you know, because of that work in development, it really inevitably led me to Bitcoin and understanding, I'd say, the perfection in the Bitcoin white paper and how Bitcoin could assist, you know, the unbanked, the underbanked in a way that really no other technology or money could. So I have been full-time, you know, in this crypto industry since about late 2016, but probably everything in my career was a culmination to get me to this point.
And Leah, it's interesting to hear you bring that up because that is one of the visions for crypto and for Bitcoin, that it will be able to expand access, the ease of moving money around to, you know, the underbanked, the unbanked. How do you think the industry has done in working towards that goal? Is that still something that's far in the future, or are we starting to see some progress on that front already?
Yeah, I think actually, I only pause because it's a great question, because I think that there's so much to be done. I think that. So much being done. So I think that, you know, everything that's being done right now in El Salvador is just remarkable, and in such a short period of time. And more than that, they're not just utilizing Bitcoin in the rural areas. Well, really, it's, you know, it's legal tender for the entire country, but also in, you know, the rural areas, not just Bitcoin, but the Lightning Network as well. So they were able to utilize an advanced form, a layer 2 technology that assists with keeping transactions very cheap. So really, what some would have thought as being way down the road because it's too technologically difficult. It's been proven in a span of months that it can absolutely work and be very successful. But beyond El Salvador, you know, Bitcoin has been used in Nigeria, in Venezuela, in many developing countries for a long time now. I think that why your question is so great and gave me pause is because there is a lot that can be done and will be done, I truly believe. There's a lot of these brilliant advances of Bitcoin being able to work without Wi-Fi, of pinging off of various radios and the Blockstream satellite. But as of right now, it does, you know, still rely upon certain type of devices. So I think that we're definitely seeing clear use case examples that I think solidify a very strong understanding within not just the crypto, you know, native population, but also regulators worldwide who are trying to understand how to work with this new asset class and money, that it can work, that it can help, that it can complement. And I think that it's only going to keep growing, maybe a bit like a wildfire. So I think it'll be really fun to watch. And, as I mentioned, I went into this industry because of its potential use in helping underserved. And I think that we're going to see more advances on that front for sure.
And really quickly, I'm curious, I mean, is Bitcoin the future here? Because I had a great conversation with Steve Kurz of Galaxy yesterday, who said that, you know, there's this growing recognition that crypto isn't just one asset, meaning Bitcoin. It's an asset class. You also have Ethereum. You have the Solana blockchain, for example. I mean, is Bitcoin the future? Or are we going to see a broadening out here when it comes to how other governments approach cryptocurrency?
Yeah, and that's often a bit of a tribal debate in our industry. I do think that many projects can be complementary. And because I do think that Bitcoin is really its own thing, I think that there is an important diversification in a portfolio that can be had with diversifying into a basket of cryptocurrencies. And I do think that other protocols have very interesting use cases that may be better than Bitcoin in certain circumstances. I think that the Solana network is beautiful and brilliant, and I think many others are as well. I think, though, that Bitcoin really has solidified that store of value narrative. I think it's going to continue to solidify that, maybe we'll put in parentheses, digital store of value narrative. And that will continue to be the case. And if that continues to be the case, as my hypothesis goes, then I think that these other projects and these other coins and blockchains, I think, will prove to potentially fill different needs that maybe aren't being met as Bitcoin continues to develop into really the premier technology network and store of value and maybe means of account. So I think that that's a great question that's often debated, hotly debated. And I think that there is a world to have both, to have multiple. And I think, again, because each are starting to really whittle out their roles, and Bitcoin definitely is starting to be seen as that store of value or inflation hedge.
And Leah, somehow we only have 2 minutes left, but I do want to ask, it stuck out to me, honestly, that you are one of the few women CEOs in crypto, and the finance industry at large has a problem with diversity on that front, and crypto obviously falls under that umbrella. I'm curious, what has your experience been like, and how can the crypto community, again, sort of diversify the workforce there?
Yeah, well, statistically speaking, women do make up a small minority in crypto, to your point, in finance and STEM as well. So you're definitely getting the nexus there. However, very honestly, I have never felt so few barriers to enter in my life than when I entered the crypto industry. I've worked in a handful of situations in traditional finance or with NGOs. And when you compare those to, compare crypto to those and other industries where, again, that lack of diversity has been widely reported and criticized, it's amazing to see how the women who have chosen to work in the crypto industry have really been strongly supported. And I think that that's both by the crypto community, and you'll see a lot of anonymous Twitter accounts trying their best to try to support some of us women in the industry, but also from the companies and firms that they work for. And as a lot of the companies continue to develop, continue to grow, and it becomes less dev heavy and become more, again, reliant on various other departments, you're really seeing a lot of women thrive. So of course, right now there are definitely fewer women in senior roles than men, but this is a growing industry and very much with a young workforce. And I think that's also key because I do believe the younger workforce does have different values than many more established industries. So the growing ranks of women in these companies are definitely rising up the ladder much faster than maybe they would otherwise. So, definitely only a matter of time before we see more women like in roles like mine, like Meltem, Hong Feng at OKCoin, Ariel Ling at AscendDX. I mean, there's just
Leah,
real.
We have to leave it there. I'm so sorry. We have just 10 seconds. Leah Wald, CEO of Valkyrie Investments. Always love catching up with you. Love this conversation. I'll talk to you soon. Thank you so much for your time.
Hi, everyone. I'm Shonali Bassick. I'm a Wall Street correspondent for Bloomberg Television and Bloomberg News. I'm so excited today to be joined by Elizabeth Stark. She's the CEO of Lightning Labs, a company she founded in 2016. Barron's has also named her one of the 100 most influential women in finance. So, without wasting any time here, Elizabeth, when you founded this company, did you imagine that you would get to where you are now by 2021? And perhaps maybe you can explain a little bit about kind of your mission in building a decentralized network.
Definitely. So I've always been an internet geek at heart. That's something that I've loved back when I got my first computer, when I started building websites, all of that. And to me, what I'd always wondered was the internet enables people to, send and receive information, connect across the world. That's all commonplace to us today. But the idea that you could access something like Wikipedia, this incredible resource, globally, where previously you had to go, say, to a library, and if you were in a small village somewhere around the world, you wouldn't have access to that. Well, the internet democratized access to information. And I'd always wondered, why wasn't this possible with money or value on the internet? In fact, the early creators of the web, including Tim Berners-Lee, envisioned in the early 90s that it would be possible to embed payments and value on the internet. So when I first learned about Bitcoin, I was actually in the academic world. I was teaching at Yale and Stanford universities. I thought, first of all, this sounds really interesting. Will people actually use it? And then they did. But to me, I saw the potential for this new type of internet, this internet of money, internet of value that was global, that anybody could build upon, and that would enable all sorts of new use cases. So I often like to kind of see a couple of years out and live in the future, and started this company back when, Bitcoin and cryptocurrency were not really cool. Not that many people cared. People told us we were crazy. I like that, by the way. That's motivating. And just saw that in the future, it was obvious that you would be able to natively send transactions, value, and money on the internet. Something I actually really care about is the creator economy. I've always been passionate about music and creators. And I wondered, why couldn't you just send, a couple dollars to your favorite band or DJ or photographer? So in starting Lightning Labs, I really foresaw what I think we're seeing today and will continue to see, the idea that you can natively send and receive transactions on the internet using Bitcoin as a technology.
Yeah, I'm curious about how Lightning now works with mainstream companies. I mean, you were mentioning, years ago, you wouldn't have been, imagined how quickly some of this technology could start to be adopted by some of the biggest consumer brands in the world.
Yeah, so what we've seen has been an incredible 2021 thus far. We're really hitting an inflection point. As a reminder for those that may not be as familiar, Lightning is a software layer that operates on top of Bitcoin that enables instant high volume transactions with low fees globally. So you can send and receive, the fees can be a fraction of a cent. You can actually send less than a cent for a fee that's far lower than that. And it's also decentralized. You can think of it as kind of a decentralized Visa transaction network where people can send and receive. And we've seen a whole host of startups. We have hundreds of startups, thousands of developers building today on this technology. They're building these applications, much like in the early internet, people built on the World Wide Web, mentioned Wikipedia, Google, everything that we know today on the web. So what we saw initially was all these startups building on the technology. They're new, they're nimble, they're able to build these new applications, everything from video gaming to podcasters to commerce, e-commerce, trading, all the interesting financial use cases. But now we're seeing a lot of interest from larger players. So as an example, Twitter recently integrated Lightning late September in terms of tipping for creators and people on Twitter using a very cool app called Strike, which is one of the applications built on top of the Lightning Labs tech. We build developer infrastructure. Jack Dorsey, one of our investors, as founder and CEO of Twitter, also Square has been great in terms of Lightning adoption. They're working on a variety of Lightning technologies. They've mentioned that they are very bullish on that in the future. So we're seeing now these larger players come in, but also a number of startups that are just getting started. And in fact, many of them couldn't even exist without the technology that Lightning enables.
Well, that's a great point to bring up, this idea of the creator economy and how this kind of new financial ecosystem is making business possible for not just new creators in art and music, but also new developers who want to create new businesses. What does that look like?
So one of the really exciting things about the world that we operate in is it unlocks opportunities for people globally. And one of my passions is emerging markets, and not just for developers in Silicon Valley, although those are great, but to really open up opportunities for anybody around the world. So as an example, we see a lot of developer activity both in Latin America and Sub-Saharan Africa. There's a great founder named Bernard Para who built an app called BitNob in Nigeria. They announced their Lightning integration a couple months back. They're now doing hackathons and engaging the developer community in Nigeria and neighboring countries as well, and getting a lot of excitement there. And one really key element that people may not realize is in a lot of these emerging markets, not everyone has, access to a debit card, a credit card. El Salvador recently adopted Bitcoin as legal tender. Only about 20 to 30% of people there even have access to a bank account. But what so many of the people have in these markets is access to a mobile phone. And a mobile phone means that you can actually use Bitcoin, you can use Lightning, you can use the network effects that come along with that with a phone without having to go through these legacy systems. With Bitcoin security, the liquidity of Bitcoin, the fact that Bitcoin has hundreds of millions of users globally around the world, and then you have the instant high volume nature of it. So for developers that want to build, instead of having to go to their regional kind of, banking APIs, they're able to do so globally and then tap into users that can then connect to this anywhere around the world.
You had mentioned that Lightning is a layer that operates on top of Bitcoin, but we're also seeing so many different technologies that are kind of being built around this ecosystem. How do you decide when it's time to kind of integrate with Ethereum or integrate with a different type of cryptocurrency? I mean, how do you think about the ecosystems that you operate in as this entire environment evolves so rapidly?
Yeah, it moves so quickly. You really can't keep up every day. I'm like, what, this thing happened, that thing happened. And my team, they keep up on Twitter because I honestly cannot keep up anymore. But that said, as a company at Lightning Labs, we are focused on Bitcoin. And this is actually because of the network effect that Bitcoin has and that then Lightning further enables. And I highly recommend that people read my good friend Lynn Alden's piece on Bitcoin network effects. She talks about Metcalfe's law, the idea that as an individual user joins a network, the value of that network grows exponentially. And if you're going to break a network effect, if something's going to come around and be, say, a better Bitcoin, you actually have to be 10x better and provide so much of a better experience that people will leave something. Bitcoin has, the most security of a blockchain today. It has the most users, hundreds of millions. It has the most liquidity and obviously the most value. So, there are unlimited number of possibilities in this broader cryptocurrency ecosystem. But as a company, we are focused on the Bitcoin angle and the network effect because that actually is what a lot of the developers want. It's what a lot of the users want, and it's interoperable with the other users. Now, Bitcoin is really going for what I call decentralized money. And what we're building is this native protocol for value for people to transact on the internet. And there's a lot of other stuff going on in other ecosystems. But to be honest, there's so much for us to build in the Bitcoin world. As mentioned, with nation states adopting this technology. I didn't have nation state adoption of Bitcoin and Lightning in my cards for, say, mid 2021. We at Lightning Labs are still a team of about 25 people. So we're now building the developer infrastructure at Lightning Labs that is powering a lot of what's going on. For example, at Starbucks, Pizza Hut is actually very popular with people paying with Bitcoin and Lightning in El Salvador. And these major companies and retailers. So there's a lot going on there. We actually have a lot more in store in terms of bringing other forms of value to Lightning and using the Bitcoin network. So right now we're focused on that.
Yeah, I'm curious. You mentioned El Salvador a couple of times now, and now you've brought it together also with that consumer aspect, being able to pay for your pizza in Salvador with the help from the Lightning Network. So how do you see this continuing to evolve? And what are the limitations still, especially in developing countries?
Great question. So the way that I see it, people in the US say, okay, it's not hard for me to buy a coffee, right? I can go to my coffee shop. I might have my, Visa, debit card, Amex, et cetera, maybe cash, although that's, less and less popular these days. But in many other countries, you don't actually have these networks. You don't have people, particularly in emerging markets, that are going to have access to them, but also the fees are quite high, right? For a merchant to accept payment with, say, a credit card, the fees could be something like 3%, 300 basis points. Now, there was this incredible tweet in El Salvador on September 7th, which was the day that the law went into effect, making Bitcoin legal tender and requiring businesses that had the technical capability, which is any major retailer, to accept payment in Bitcoin. And this is largely over Lightning. And so that tweet was somebody paying at Starbucks, a couple of dollars for a coffee over Lightning. And the fee was 0.05 of a US cent. So imagine you're thinking, okay, 3% versus 0.05 of a US cent. And even with the technologies we're building we have financial products at Lightning Labs, the fees might be something 10 bips or something like that, right? It's less than 90% cheaper than the existing networks. And we also have the capacity to reach billions because of the open monetary network that we're building with the broader Lightning ecosystem. We're one of a number of companies building on this technology and building the infrastructure. And as a result, people can tap into it in a way that they can't just tap into existing networks. And that's what the power of having a mobile phone is and bringing Bitcoin and Lightning to billions.
So what about, this idea of fees and friction, covering the banking industry for a while now, you realize how old a lot of this technology. And if you are, you are finding a better mousetrap. So at what point does the traditional financial ecosystem start to change in a bigger way now that we can know that it's done more cheaply and with less friction?
I think that's a great question. I actually think we're seeing emerging markets leapfrog, kind of like with mobile networks where they didn't have landlines, but people were able to have mobile phones and they didn't actually have to wire for landlines. And my friend Nelly Mensah, who's Ghanaian, Canadian, Russian, she has a really great insight in terms of what's going on in these emerging markets and the leapfrog effect. And the idea there is they don't actually have the legacy systems. But for example, here in the US, we're still in 2021 using paper checks. And that kind of just blows my mind, right? That we have the internet.
Mine too.
Had it for decades. We're able to instantly send information, but we're sending pieces of paper, right? So that needs to change. Even the idea that ACH settlement here in the US can take days, especially if it's a long weekend, there's a holiday. Bank hours, the idea of 9 to 5. The internet's global. Bitcoin is a global technology. Bitcoin never stops. Lightning is a global technology. So with the emerging markets, they can actually move forward and adopt this technology. Now, one thing I will say is Lightning is only about 3 years old. We actually launched, a number of the developers launched the first versions of Lightning for use with real Bitcoin in 2018, right? And Bitcoin's first major use case, I like to call Bitcoin the asset. That was just the buy and hold, what a lot of people are familiar with. But what Lightning enables is Bitcoin the monetary network. And it's still early days. So it really is like those early days of the internet. It's not perfect. There's still developer kind of features to build and things to work out. But the amount of progress we've seen in going from, zero to nation states has been incredible. And for a number of users, this is a big opportunity for them. And they're actually able to now accept digital payments when previously that wouldn't have even been an option. So we're really excited to be fostering that.
I know there's more we want to get through, but I do love this question from the audience about mining, because our audience member thinks that mining is one of the biggest stumbling blocks right now. And so do you see more innovative approaches to optimize mining, especially when it comes to energy and the real estate footprint?
Yeah, so importantly, Lightning is a layer 2 that's operating on top of Bitcoin. You can think of it as, say, there's a Fedwire and then there's, say, a Venmo or a peer-to-peer network, an ACH on top of it. So in Lightning, there's actually no mining. People run what we call nodes, which are like servers on the network. And we have tens of thousands of nodes already on the network today, which is important, by the way, because the idea that something like both Bitcoin or Lightning can go down is not really feasible in the sense that all of those nodes, both on the Bitcoin base layer and then on Lightning, would have to go down. You'd have to have basically no internet, which is different than, say, some other blockchain ecosystems that have gone down substantially lately. Now, mining occurs on the Bitcoin base layer. But one key element, people like to talk about the energy usage of mining. The way that I think about it is there's a lot of clean energy. Not all energy is equal. And the cost nature of mining drives people toward the clean energy because that's typically going to be most efficient and you want to have the cheapest energy possible. Now, what Lightning actually does is make Bitcoin transactions far more efficient from an energy standpoint because you only need to go to the Bitcoin blockchain once to get onto Lightning and then once to get off of Lightning, but you could transact an unlimited number of times in between. So you actually can amortize the cost of those Bitcoin transactions in terms of value and also energy over so many transactions that the ultimate goal, and I believe we'll get there, is we can be far more efficient than the existing financial system when it comes to energy usage. There's also a very cool company called Crusoe that a friend of mine started, and a number of these upstream data as well that actually are carbon negative. They're using excess energy by the oil and gas industry to mine such that that would otherwise be released into the atmosphere. And instead, they're actually mining with that energy. So it's helping the environment.
So I want to also get your thoughts here on the idea of the Internet of Money, this term that you've given me, what your goal is here, and how that fits into some other language we hear when we think about cryptocurrency, which is Web 3.0.
Exactly. So when I first started this company, being the internet geek that I am, I envisioned the ability to natively transact on the internet. And one of the really key things that Lightning itself enables is for anybody to build on top of this, much like they could build on the internet. It's an application layer because you can have these instant high volume transactions with very low fees. A lot of the use cases that we've seen emerge today include gaming. People love sending and receiving Lightning payments in-game. For example, at the Bitcoin 2021 conference, over the course of 2 days, there was an esports tournament where 50,000 transactions were sent amongst the participants, and people are, sending and receiving, earning money in tournaments. That's also gone global. Gamers in Brazil are really into Lightning these days, and they're actually making more money using games developed by a company called Zebedee than they would in a job, right? And they're able to earn by playing. So you're mixing kind of the fun and the work. But what the Internet of Money means is you can natively send both data and value in payments. So for example, there's a very cool chat application called Sphinx Chat, where you can both send a message and you actually send a payment together with a message over the Lightning Network. So people are using Lightning also to send encrypted data. You can also send what we call streaming Satoshis. That's the ability to send sats, as we call it, the lowest denomination of Bitcoin, fractions of a cent, to podcasters, to creators, all of the things that I initially envisioned in 2016 as I was starting this company. There's one very great engineer named Andy Schroeder who actually reverse engineered his Tesla and integrated Lightning into his Tesla such that he paid for charging. This is something that we've actually tweeted to Elon Musk. I know he likes to talk about crypto.
Did you hear back?
Exactly. They embedded Lightning payments into the Tesla charging in the Tesla itself, and the Tesla can actually read the signals and he can pay for charging with his Tesla. There's another cool company called Impervious that's building what we call a layer 3, a data layer on top of Lightning that enables people to build things like VPNs and other forms of sending data over the internet where you embed a payment. Machine-to-machine payments, APIs. You can actually send a payment with Lightning and authenticate. You don't need a username or password. If you think about a number of, say, API-based companies or technologies regarding, say, machine learning and AI, you actually just pay. And once that payment arrives, the API will know that that payment cleared. And you can do that millions of times per second. And that's part of what Lightning as a technology enables in the future.
Elizabeth, what do you want? And, I realize this is really only a 3-year company or so. What do you want to be in the next 5 years?
Great question. Yeah. I mean, in the earliest days, right, in the 2016, 2017 days, we were a couple people in a co-working space coding away on this protocol. And the way that I like to think about it is, first, we had to build the rails, and now we're really building the train, right? We're growing the team. We build a number of liquidity products and financial use cases that operate on top of the Lightning Network. But the way that I see the future evolving is people in the community in Bitcoin like to talk about number go up, that, the idea that the price goes up. We focus on number of people go up and the idea that we can bring this technology to billions globally. So the way that I foresee it, much like the way that the internet became ubiquitous amongst, the world, and it took a while to get to, the emerging markets, Bitcoin and Lightning will become ubiquitous as the Internet of Money. But importantly, a lot of people will likely not even know that they're using this. It'll be abstracted away, kind of like people don't know that they're using these base internet protocols, IP, TCP, HTTP. And that's great. And the goal is to really provide people with access to both send and receive, to send this globally, to make it as easy on the internet as it is today to send a photo, but to do so with money and value. To see a whole host of new use cases that weren't previously possible. We talked about the Tesla use case, self-driving cars, machine to machine. The way that I look at Lightning is it enables 2 classes of exciting use cases. The first is those that weren't previously possible. And the second is those that previously did not have access, like the whole emerging market use case. So 5 years out, the goal is really to get to the billion plus, to make this technology ubiquitous, and then to do what the internet did for information for access to financial services and value, which is really to democratize it and make it accessible to people globally around the world.
Elizabeth, I couldn't thank you more for your time. I hope to be able to catch up with you again very soon to see how this is being adopted all across the world. Again, that's Elizabeth Stark, the CEO of Lightning Labs, and I'm Shonali Basak, a financial correspondent for Wall Street, for Bloomberg
Thanks so
News.
much. This is a super fun conversation. Bye-bye.
At this moment on Wall Street, the market is experiencing the most volatile trading in over a century.
Market's down 1,000 points. I hear the exchange is a total mess. Are your orders being acknowledged? I hope so. I've got 4 people on hold.
While other systems were stalling during one of the most volatile days,
I've got confirmation.
trading systems built on the InterSystems data platform
The order's been acknowledged.
kept brokers operating as usual.
Chaos out there. Not so bad in here, though.
For stability in an unpredictable world, look to InterSystems.
Hi, I'm Joe Lichtenberg with InterSystems, and I'd like to share with you today what we're seeing from many of our customers. Businesses today need to see around corners. But what does that mean exactly? Well, in today's real-time, hyper-connected world, organizations need to understand the likelihood of potentially disruptive events that can impact their business in advance so they're prepared to react and adapt in the moment. It all starts with having real-time visibility across the entire enterprise, or what some call a single pane of glass, presenting a single accurate view of the business. Real-time visibility is important, but that alone is not enough. For example, our financial services customers need an accurate, complete, and real-time view of positions and risk across the entire enterprise, not just for individual products or individual regions. But they also need to understand the risk of a counterparty defaulting or a short position spiking in price unexpectedly, so they can take the appropriate countermeasures in advance and be able to react in real time when it happens. Supply chain executives need real-time visibility across their entire extended supply chain so they can track all of their orders and shipments. But they also need to understand the risk of suppliers that may be unable to deliver on time and in full, or the impact of an unexpected port closure on delivery SLAs, so they can change suppliers or reroute shipments in the moment. And manufacturing executives need real-time visibility into their operational KPIs, like overall equipment effectiveness, and they also need to predict the likelihood of machines that may fail, so they can take the appropriate actions before a machine failure shuts down a critical line. We call that seeing around corners. It's what the business demands, but it can be difficult to achieve in practice. And there are many reasons for this. Companies have to contend with organizational silos, data and technology silos, and just overall complexity within their own infrastructure and across their partner network, especially for companies that have grown both organically and through M&A activities over years and sometimes decades. Critical information is often locked away in different systems with different owners and in different structures and different formats, making it difficult to create one consistent single pane of glass that provides the business with the information it needs to understand what's happening in the moment. And the more advanced organizations that we work with are also able to provide the line of business managers with not only this real-time visibility, but also the analytics and the exploration capabilities to allow them to understand what's likely to occur so they can take the appropriate preventative actions in advance and be prepared to take immediate actions in the moment to keep the business running smoothly. So how do they do this? Well, technology is advancing fast. Today, there are exciting new approaches to information technology that are providing the business with this kind of information and vision. One approach in particular, what the analysts call an enterprise data fabric, is a fundamentally different approach that lets business users connect on demand to data in silos inside and outside the organization. It provides the business with one single consistent pane of glass into what's happening in the business in real time. And it also enables the business users, those closest to what's happening on the ground, to drill into the information to get immediate answers to their questions and to run predictive machine learning models and artificial intelligence algorithms so they can understand the likelihood of, for example, a counterparty defaulting or a supplier that may be unable to fulfill on time and in full, or a critical machine that may fail, so they can take the appropriate actions in advance and keep the business running smoothly. That's what we call seeing around corners. And leading organizations around the world and in every industry are doing this today. For more information, please visit intersystems.com. Thank you.
I'm here with Stacey Marie Ishmael. She's managing editor for Bloomberg Crypto. Stacey Marie, it's great to chat with you.
A pleasure.
Nice to finally meet you. You've only been at this job for
7 weeks.
Who's counting, though?
I am.
Okay. Well, give us an update on what's actually happening with Bloomberg Crypto right now.
So Bloomberg has been covering crypto institutionally for several years. And this year, we decided that we would build out a dedicated crypto team. And what that means is we're going to have even more people who are 24/7 across the world. We'll have folks in Asia, we have folks in Europe, we have folks here in the Americas, really thinking about breaking news, enterprise analysis, just like smart, thoughtful, authoritative coverage of what's happening in crypto.
Why the change? Why the shift?
Well, I think it's that we had been doing it for a long time, realized we were making interesting headway in terms of like, you're starting to see institutional interest in crypto as well as retail interest in crypto. And frankly, there was just like more than enough news to go around. So, I think making the decision to really invest in it, hiring out a team, signals how seriously we're taking it as an asset class.
How are you thinking about the evolution of coverage when you look at the horizon over the next year, over the next 24 months?
I think there's an interesting bifurcation in people who are interested in crypto. There are people who are interested in coins. They want to know absolutely everything about what's happening with Bitcoin or Sol or all of those things. Then there are people who are very interested in NFTs, right? Like what celebrities are endorsing them? Can you make money in them? Are they even tradable? What are they actually? What are the legal considerations of NFTs? And then there are folks who are interested in, I would say more broadly, blockchain and DeFi. Like how is this technology affecting other industries? Obviously financial services, but so many others.
And this is all under your purview?
This is all under my purview. It's very busy.
If there is one area of personal interest for you of what you just described, where is it?
I'm super interested in the DeFi element of things because I think, one, it's affected by and affects both like the coins and NFTs and everything else, but it also is such like a core Bloomberg area of expertise, right? Like we understand finance, we understand financial markets, we understand financial institutions. And so it's great for us to be able to say, okay, you are an equity investor in Robinhood. Here's how you need to understand how crypto is changing that landscape. Or, you are interested in payments and Stripe and MasterCard and Visa or MoneyGram in the case of remittances. Like we're going to help you contextualize what's really happening and how these different ways of thinking about what's possible with money is really going to affect your portfolio.
Where do you think we are in that understanding right now? If investors broadly understand fixed income and they broadly understand equities and currencies, where are they with crypto?
It really depends. I think what we're seeing, we had a story about this a couple of days ago about Wall Street going from eye rolling Jamie Dimon saying Bitcoin is worth less to, okay, fine, we'll hire a bunch of people and staff up these desks and initiate coverage. At some places, there's like a grudging acceptance that this is something clients care about or this is something their prop desks are interested in. And then there are what I'd call like the emerging crypto native space, right? You also have a lot of folks in venture capital who are very interested personally in crypto and who are making significant personal investments in the space as well. But interest and understanding are not always correlated. So we're also definitely seeing people really starting to pay more attention to what's actually happening, right? Like they don't just want the move, they want to know why the thing is moving. They are hearing terms like hard fork versus soft fork, and they're not just like rolling their eyes. They really want to understand what's at play here. I'm wondering how you're thinking about on the ground elements of this. You and I were talking before, and you said your first day coincided with the day that El Salvador adopted Bitcoin as legal tender. Yeah. How are stories like that playing into crypto's coverage here? one of the great strengths that we have is we have people everywhere, right? And crypto as a 24/7 asset class, it's global, it's interesting. We can say, hey, Facebook has announced that they are trying to do remittances to Guatemala. Who do we have in Guatemala? Like, let's make sure we understand that story. Or the Miami mayor wakes up every day and thinks about Bitcoin. Like, we can talk about that from a really interested and informed place. And I think that's a real strength, right? Like I remember it was like 5 o'clock or 5:30 in the morning when China, New York time, China said that all crypto transactions will be considered illicit. And I didn't have to immediately do anything because the team in Asia was like already on it. And so we have this ability to do that kind of global story in like smart and interesting ways that I think is really beneficial.
Stacey Marie Ishmael, managing editor for crypto here at Bloomberg. Thanks so much for joining us.
The race for the non-fungible token space is heating up as celebrities like Snoop Dogg and Reese Witherspoon join. Witherspoon revealed her first purchase last month, and Snoop Dogg is joining forces with the Harlem Globetrotters to release an NFT. And in a space that's been seen as an all-boys club, some women have assembled collections that's already made waves and brought more diverse and female representation to the NFT space. So I want to welcome Lisa Mayer, founder of My Social Canvas and Boss Beauties, coming to us live from New York City, and Cynthia Gentry, one of the founding members of Boss Beauties, who's currently in San Antonio, Texas. Welcome, ladies.
Hi. Thank you so much for having us. We're excited to chat with you today.
Absolutely. I'm excited to chat with you too. So let's jump right into it. Lisa, I'll start with you. For 10 years, My Social Canvas has sought to educate and empower the next generation of women and girls through scholarships and mentorship programs. And you recently launched Boss Beauties with your non-fungible token collection. First, tell us your definition of a non-fungible token and then why you are moving into this space.
Yeah, no, absolutely. It depends who I'm connecting with. Sometimes I'll use different examples to really put it into context. But never before in history have digital assets been able to be purchased and traded, like they are right now on the blockchain. You used to have physical merchandise, like one of these phone cases that we sold through My Social Canvas, and you could buy it, right? But now we're able to do that through NFTs, through digital assets. So we look at digital artwork, everything from music, things are being traded on the blockchain. And through that, with My Social Canvas, we've been in this space for 10 years, working to mentor and provide scholarships for young women and girls all over the world. And it's something we're so passionate about. During the pandemic, we started researching NFTs. I have to credit my husband, Anthony. He kind of dove into the world of NFTs, which is so fast moving. Cynthia, you'd agree, right? And being in the space. And we saw the opportunity to really get into the space and bring more women into the space, and also use it as a way to also fund scholarships, to be able to give out more scholarships and fund more mentorship programs and opportunities for women and girls. So we are so thrilled to be in this space, and we can't wait to bring more women alongside us and work with them to get them into the space as well.
Lisa, when we think about what it's made up of, I feel like, or it seems like, the digital art component has taken off largely because a lot of people, they may be stuck at home with a little bit more time, maybe a little bit more money on their hands, and they want to find a different kind of asset to put their money into. And so you were telling me earlier about those two major ways that motivate people and that people are getting into NFTs. Explain what those two ways are.
Yeah, so, it depends who I'm talking to. But, I was explaining this to my sister recently, and her husband is really involved in the stock market. He loves, trading and investing in stocks. And so that's actually one way people are getting into NFTs, and they're investing in NFTs and getting into the space. And they're thinking it a little bit like stocks, actually, getting in on a project. If it's a collectible project or even a one-for-one, and getting in and getting some NFTs in the form of digital artwork, but then being able to later resell them just like they might stocks, right, as an investment where they're able to make capital and make money on them. So it's a transfer of wealth, really, as well, which is really exciting, and why we want to bring more women into the space and diversify the space as well.
Absolutely. And so some of this NFT buzz has already given you guys quite a few eyes on you. Just to make note of this, Boss Beauty was in the New York, or still is in the New York Stock Exchange Art Hall. You're the first NFT to go there. And you were also on the NASDAQ screen in Times Square last month. And I just heard that Reese Witherspoon, who has a Boss Beauty NFT in her wallet, her company, Hello Sunshine, saw the collection in the New York Stock Exchange Hall. And so since you've accumulated such an amazing amount of buzz, what does it mean to you right now? What does all this mean at this moment and in such a short amount of time?
Yeah, I mean, we're seeing the traction and momentum we're getting, as well as other amazing projects in the NFT space. But what they don't always see is the work that we've all been doing behind the scenes for many years. I actually just saw Beeple talk a little bit about his amazing NFT that went for $69 million the other day. And he was even sharing this too, that he had been in this space creating for many years before that big moment. And that goes for us as well. We're so honored, by the way, that we were featured on the NASDAQ billboard for International Day of the Girl. We brought down some of the young women from our community that we've actually mentored and that have been a part of our mentorship program. And they got to actually see themselves up on the NASDAQ billboard for Day of the Girl. And, even that seems like a small thing, but it really, we wanted to celebrate them. And just make them be a part of it too. So that was an honor for us on Day of the Girl. And at the Stock Exchange, this is the first NFT known to be at the New York Stock Exchange on display in their art hall. And the significance of that, I get the chills at it. So we were walking by yesterday to see that NFT, as you mentioned, Hello Sunshine. This incredible woman from their team was with us. And our NFT, our Boss Beauty, is on display across from the Muriel Siebert Boardroom, which honors the very first woman to ever have a seat on the New York Stock Exchange. So that in itself, it felt very significant. It felt really special. And I love that people that are going for their IPO, CEOs, heads of state can walk by our Boss Beauty in that art hall. They're on the way to the big boardroom, getting ready for the IPO, getting ready to ring the opening bell for the stock market. And they're up there and they see our Boss Beauty. So it's so significant to us and really such an honor as well.
And congratulations again for those three actually amazing things that have happened with Boss Beauty. And so I want to bring Cynthia into the conversation. Cynthia, this collection, it has a wide range of women. We see women of all shapes, colors, sizes, and I do mean colors because I see some women with pink and blue skin. But a lot of this, you guys have said it was intentional. And so I'm wondering, what's the message that you want your collection to say to the world?
Yeah, thank you for that question. Representation is so important, especially in Web3. The Web2 before was male dominated, and women like myself, women of color, felt alienated and excluded from that. And we definitely don't want to continue that narrative into Web3 and into the decentralized world that we're building, the metaverse, as they say. So representation is super important to Lisa and to the Boss Beauty's team, as we were launching and thinking about not just ways we can make representation a big part of like the collectible series and how they look. Like we have hijabi women, we have women of color, like you said, literal purple and pink women, but we also have a really inclusive, loving, supportive community of empowered women from various different environments or, like cultural backgrounds, ethnicities. So it's super important, and it goes beyond just the art as well.
I should note that there are also several different professions depicted in the illustrations. And Cynthia, I just want to ask you a quick follow-up question. You were saying earlier about how it's been received, how Boss Beauty has been received as something where representation is celebrated. So what have been some of the responses you've personally heard from supporters?
Yeah, well, I've had people tell me that their female bosses got into NFTs because of Boss Beauties, because they saw themselves as a CEO. I've had fathers come to me and tell me they've collected like 40 Boss Beauties for their children and for their nieces, because, I mean, there's like a mother, right? There's a caregiver one, and Lisa was really adamant about including that representation, because all women are important. All women are bosses, whether you're a CEO executive or you're a stay-at-home mom. So I've gotten a lot of like really beautiful, touching messages about people who've gifted this to their wives, their girlfriends, their grandparents. And that's kind of what we were wanting to do, right? Lisa, you could say, like, we really wanted to bring people who probably don't or probably aren't in Web 2 yet, and give them a window into this space. So I think representation did a good job of doing that, and including different women from across different industries also helped.
And so you, Lisa, the company has also opted to help women-led NFT companies in the space as well. And so tell me how you did that at the start of Boss Beauties.
Yeah, no, absolutely. So leading up to the launch of Boss Beauties, we held a virtual summit where we brought together really incredible women role models from all different industries. We had the president of Vayner NFT. We had Rebecca Minkoff, who just launched an NFT collection as a fashion designer. But one of the women that we featured and spoke to is Ashley, who had taken over the Fame Lady Squad. And she had been in the NFT space. But earlier in the summer, actually, and it feels like so much longer ago, but when you're in this space, you know, everything happens so fast. So I feel as though I've known them for so long. But we connected over the summer and, you know, heard a little bit of their story. And they had actually taken over from the original creators of that project. You know, the original creators were actually two men, but they were promoting the project as if it was women-led. And so the creators of that project kept the funding, the two men that had started it. And we knew that her team, Ashley and the team, you know, they needed funding to get their project off the ground, and to really give back to the community and provide value to the community. So we decided to, you know, give them 5% of a portion of our collection launch to help them get off the ground. And, you know, speaking firsthand, I know what it's like to build something as an entrepreneur with limited capital and resources, and how capital and resources matter, right, in being able to help you build out your vision. And so we decided to give a portion of our launch to their collection to essentially, you know, help them get started as entrepreneurs in their collection. And we also gave 5% into a scholarship fund, which I'll talk about a little bit later. But we can't wait to announce that as well.
Okay. Well, also this, you inspire young women to launch businesses. Entrepreneurship, it's a vitally important part of our economy. And so how are you doing that briefly, if you can?
Yeah. So during the pandemic, actually, Jody, who's on our team, she's amazing. We had launched a virtual social entrepreneurship internship and mentorship program. It was really a hybrid of a mentorship and an internship, you know, because college women needed to have something on their resumes. The pandemic, you know, forced many companies to actually cancel their internship programs, and, you know, students needed that opportunity, right? So we launched a virtual internship and mentorship program where we brought young women from all over the world, actually, in the US and 15 different countries, to be a part of our social entrepreneur program. We brought in role models and speakers from many incredible companies, from founders that had raised venture capital to VCs. Actually, we had a woman that works at the Founders Fund in Silicon Valley come to speak to our community and mentor them. We had other incredible women leaders come speak to them and talk to them about how to start a business, and in addition to that, how to get into tech and other industries. So through that, you know, we've taught them, and we're giving them that experience, practical experience, to learn about the industry and learn about business, so that someday they too can start their own company, or maybe they want to work at another startup and get that experience to get started. So, you know, we were so thrilled to do that. I love when I hear from young women that have been a part of this, that they've then gotten their dream job in Silicon Valley, or gotten, a job at another company, or started their own business. So that's a little bit of what we've been able to do.
All right. And we probably have about a minute left. I want to find out about the book club that you guys are launching. If you can tell me briefly, Cynthia, I know you're hoping to connect with activist and poet laureate Amanda Gorman as well. When will this project start, briefly?
Well, yeah, definitely. We'd love to connect with Amanda Gorman. And she's an exceptional example of the kind of person that I feel is really representative of what Boss Beauty stands for. She's brilliant, right? But also we're interested in connecting with authors who are like-minded as well, and poets across different genres, and not just Amanda Gorman, but fingers crossed on that one. Lisa, do you have anything to add about the book club?
Yeah, no, with the book club, we want to really be able to share stories of incredible thought leaders and authors in many different industries to really share their books and their stories with the world. So that's what we're looking to do.
Okay, great. And if I were to just ask really quick question to Cynthia, where do you see NFTs going next?
Well, that's a really big question. I feel right now they've taken over. It's a big question. They've taken over art. Art is an incredibly liquid market. It's, for hundreds, millions of years, maybe, elites and people who have been putting their capital into art. And so we've seen a very quick move of that with NFTs. I do think the space will explode a bit more. We're going to see more interactive NFTs, more gamified NFTs, and it's even going to go into real estate, tokenized events, ticketed events. So NFTs are really, really broad, and it's going to be insane.
And Lisa, if you could add just maybe one or two spaces you feel like it would grow into.
Yeah, no, a little bit of what Cynthia just said as far as, real estate, right? There's so much potential there, but I think really access to events and access, you look at what VFriends is going to do with VCon. We have certain events where we'll feature incredible women role models like Olympic athletes, CEOs, and through our NFTs, you'll be able to access those events too. Really, there's so much potential with NFTs that it can expand into any industry. And I can't wait to see what happens, right? We're along this journey and it's an exciting ride. So.
An exciting ride indeed. And ladies, I thank you so much for joining me. That's a great place to leave it. Thank you all for joining the Financial Innovation Summit. We hope you enjoyed these conversations. Thanks again to all of our speakers and moderators for a wonderful program. And thank you to our U.S. presenting sponsor, Invesco QQQ, our presenting sponsors, CoinShares, Copper, InterSystems, and Qatar Financial Center for making this virtual summit possible. If you'd like more information from our sponsors, please visit the resources tab on your screen. And most of all, thank you for being such an engaged audience. Thank you for watching. I'm Bloomberg's Renita Young. Have a wonderful day.